lot of the market is already corrected. The 5 to 10% correction we were looking for has been happening internally.
This feels more like coming down from stimulus payments than it does reflecting Delta variant fears.
This is going to be a grinding market, one where the biggest challenge continues to be for investors to stay in the market.
We're starting to see the foundations now of a significant boost in productivity for the next 2 or 3 years.
We know that a taper is coming. The biggest disagreement on Wall Street right now, is it September, is it December? Guess what? It doesn't really matter in the grand scheme of things.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market down 6. We decline. We're negative 0.1% on the S&P. Tom Keene following the biggest one-day slide in about a month on the S&P 500.
Biggest one-day slide in at least 26 days. The drawdown, John, is absolutely extraordinary. Let's look at the broad drawdown right now.
Horrible.
Under 1% SPX. Dow drawdown 1.2%. But, John, to be serious here, Afghanistan and the rest is really beginning to color the Washington fiscal linkage and then that into the market after the economic data we saw yesterday.
Tom, you're right to bring it up. We've talked about it many times. To what degree the issues abroad now will overwhelm the domestic effort? Do you think we're at that point at the moment?
I think we're in a shift here. I think everybody's numb. Read the Condoleezza Rice. We'll feature it with Anne-Marie Horton here in a bit. I mean, everybody's starting to think about this. But, John, I'm going to suggest this seriously with great respect to the soldiers that fought and died and so many injured. We're in shock, and only today am I beginning to see those linkages.
Well, you said yesterday you think this administration is in shock as well. Many people in this market, Lisa, responding to something as simple as a retail sales print. But Tom's right to bring that up and connect it to the next fiscal effort, because when you spoke to economists yesterday, they believe this was the payback after the stimulus checks earlier this year.
And Ben Emmons actually came out of Global Macro Advisors. He came out and he pointed to a correlation between 10-year yields and the approval rating of the president. And there actually is somewhat of a linkage, at least over the past number of months. And this idea here that as his popularity wanes, you are seeing Treasury yields go down. Causation is not correlation. Correlation is not causation.
Chicago
but here's, oh dear Lord, really we're going right there. But John, there is this feeling of a sort of a coming together of a lot of different factors right now leading to this weaker feeling.
The outlook feels like it's on a knife edge, Tom. I think if we got a group of investors together right now, we could find some form of consensus, but it would have such low conviction going into year end and beyond.
We've got some guests today with real conviction. Look at the conviction of Ellen Zentner and her team yesterday, John. They marked down GDP 6.9-ish down to 6.5-ish, whatever. So I think the conviction's there, but I really want to emphasize, John, we're all in shock, and we have to deal with that. And frankly, I would even go so far as to say maybe it's a new Jackson Hole.
We'll head down to Washington in about 10 minutes' time, Tom, and catch up with our Washington correspondent. Here's the price action this Wednesday morning. Is it Wednesday? Equity futures down 6 on the S&P. We're negative a little bit more than 1/10% on the S&P 500 after yesterday's slide. Major drawdown. In the bond market, yields unchanged on a 10-year. I knew I could wind you up about that. 126.50 on 10s. And euro dollar, Lisa, unchanged at 117.16.
You said something that I want to just pick up on. You said that there is such dispersion in views, not a lot of conviction, and really the person who exemplifies that is over at Bank of America, where the yield forecast for the 10-year Treasury note is between 1% and 2%, depending on the outcome. Just to give you a sense of the range of potential interactions with the market, given how uncertain people are about the outlook. Adding to that uncertainty, 8:30 a.m., we get U.S. July building permits and housing starts after yesterday's disappointing data with respect to home building sentiment. Really weighing on some of these figures is the high house prices. The fact that lumber prices, yes, they have come down, but still the input prices still are much higher than they have been in the past, including labor, which is in short supply. 8:30 a.m. also, former Treasury Secretary Jack Lew is joining Bloomberg Television. Interesting to see what he says about infrastructure, not only domestically, and how much he thinks that the Biden administration's plans have been stymied by some of the lack of popularity around some of his recent moves, but also on an international level as a way to counter China's Belt and Road Initiative. And then at 2 p.m., we get the meeting minutes from the last Fed meeting, the last Fed confab. How much are we looking at on the margins, the big three, the top of the Federal Reserve in terms of members and power, really looking to taper in the near term? And I've got to say, John, I was struck by the fact that food prices have gone up 31% in July year over year. This is not something that central banks typically take into account. But when you take a look at the real world consequences of this, perhaps you get a better sense of why the University of Michigan survey was such a huge disappointment on Friday and why you're seeing on the margins retail sales disappoint.
Lisa, it's such a good point. It's such a good point,
Tom. That chart out on Twitter.
It's the difference. It's the distinction between what the policymakers measure and what people on Main Street feel. And that's very different right now.
Well, with the uproar with Bill Dudley a number of years ago, of course, supporting Bloomberg with all of his good academics, and when he was New York Fed president, it was something about iPads or something. I can't remember the details. But, yeah, there is that disconnect, John, and it's tangible. And, you know, I really sympathize with our viewers and listeners. They don't care about the Dallas trim mean.
Absolutely not. That's not what the bill looks like at the end of the month, Tom. You don't get to cut off the bits you don't like.
Really? I didn't notice that.
I mean, maybe you do. I don't. Let's get to our first guest this morning, Jeff Henriksen, Thorpe Abbott's Capital CEO and University of Oxford Senior Fellow. In your words, sir, equity's still the best pond to be fishing in. Why, Jeff?
Yeah, thanks for having me, guys. It's been a great time listening to you guys talk about everything. So I think we look at asset classes. We don't look at asset classes as some monolithic security that you need to either embrace or avoid. We look at every asset class as an opportunity set. And when we take a look at the market today, we think equities, you know, while headline valuations might look expensive, still provide the best opportunity set for investors to find, you know, places and ideas to place capital. That said, I think it's becoming more and more of a stock picker's market. I think you really have to understand the types of businesses you're buying, the valuations at which you're buying them. But if I had to pick one asset class that I want to be spending time diving into and really learning where I can find mispricing, equities is still that asset class. And I think that is a function of where we are with the recovery, although we've seen some headwinds recently that we can talk about, but recovery is still in place. You have inflation running hotter than most people would like to see, and yet you still have, you know, what is it, $4.5 trillion and stuck in money markets still. And I think I saw the other day that negative yielding assets, dollar assets globally, are now back around like 17 trillion. So kind of where we are vis-a-vis the recovery, I think markets are still offsides here, and I think capital's incrementally going to go to equities.
Buried in your note, you talk about PE compression, where we get the ratios that we all look at compressed in. John Golub, who's at 5,000 SPX, feels the same way. How much can PE compress?
Well, I mean, they could compress. I guess my concern with PE compression really is around inflation, because the worst possible environment for stocks, in my opinion, and I think history proves this, is a period where you have slow growth and high inflation, a stagflation type of environment. And I think, you know, in the 1970s, you saw PE ratios go from I think like in the 60s around 18 times to below 10. And that's because inflation is very value destructive. And so I think part of the potential for compression is going to be a function with what happens with inflation. But that said, I think a lot of companies are, I don't know if I buy the idea that the S&P multiple is meaningful in any way. And the reason for that is I would say twofold. I'd say one, you know, if you look at historic multiples in the S&P, you have to look at historically, what's the S&P been made of? Well, if you go back, you know, 10, 15, 20, 30 years, I mean, industrial companies, a lot more commodity exposure, very capital intensive businesses. Whereas if you look at it today, the composure is much more heavily weighted towards tech, which, by the way, does a lot of investing through their P&L. So, you know, I'm not even sure if earnings are a meaningful number to put a multiple on for a company that's growing rapidly and investing a lot through their P&L. I mean, you know, we're expensing the costs to go out and acquire a customer, but those customers have very long lives and they can be very sticky. And there's an argument that you should be capitalizing those costs. So multiples are a tricky thing, and I think you have to keep an open mind with how you look at it.
All right, so Jeff, how do you then evaluate companies that you see as particularly good stock picks?
Well, I think we look at two types of situations, right? We're focused on either finding what we'd say are really traditional value trades or mean reversion trades. So assets or companies, you know, equities and companies that are trading just meaningfully below what they're fundamentally worth. And then we try to find higher quality wide moat businesses where we think the growth component and the reinvestment opportunity that the company has is misunderstood by the market and mispriced. So those are the two buckets we look at. Last year, that first bucket is where we found all the opportunities. Right now, most of those have already been reverted. I'm not seeing a lot of opportunities in the deeper value part of the market. What I'm finding more opportunities on are kind of smaller growing businesses where I think that growth opportunity is mispriced. So how we try to evaluate that is we try to identify what is the true reinvestment opportunity and what's the true amount these businesses are really reinvesting. So we try to look at the P&L and we pull out expenses that we think should be capitalized, reconfigure their income statements and balance sheets to try to really get an understanding of the incremental returns that they're earning and the value that they're creating. And to do that, you can't just apply a multiple to a bunch of companies like it's some monolithic thing. You have to get in and understand the economics of those businesses to do that. And so that's why I say it's a stock picker's market.
A man who does his homework. Jeff, it's good to catch up. Come back soon. It's been too long. Jeff Henriksen there, Thorpe Abbott's Capital CEO. Just some of the things to think about this morning, Tom. Equity futures down a little bit more than 1/10%. What are we, a whisker away from all-time highs after yesterday's move lower by 0.7%, 0.8%, whatever it was?
And what's the VIX 18.8? John, one thing I would point out is Swiss franc. I look at Euro Swissy, and it's the one indicator, the one tea leaf that's giving us a little bit of angst this morning.
Well, Tom, I'd add to that. I'd say look at what's happened with energy as well. Real concern around energy, both equity and credit, but also the commodity itself, oil. A lot of people have had to rethink the demand scenarios going into year-end and beyond now, Tom. Given what's happening in Asia, we're talking about a COVID elimination strategy in places like China. Tom, when you think about that, that means the tolerance is so much lower than compared to the United States and Europe. And these places begin to introduce restrictions and start to shut down economies again. I'm looking at New Zealand. That starts to have an effect over time.
It have an effect over time, and the interdependencies here are pretty evident, again, as we are in shock over Afghanistan.
We'll head down to Washington, D.C. next to cover that story and catch up with our Washington correspondent who was in the room in that news conference yesterday with the National Security Advisor, Jake Sullivan. That's next from New York. This is Bloomberg.
With the First Word News, I'm Laura Wright. The Biden administration says it has cleared the way for Americans to travel to Kabul airport to leave Afghanistan. U.S. officials say they have assurance of safe passage from the Taliban. About 11,000 Americans have said they're in the country. Roughly 3,500 U.S. troops are on the ground providing security at Kabul airport. There are also numerous Taliban checkpoints there. British Prime Minister Boris Johnson is rejecting calls for a formal inquiry on Afghanistan. He says the Taliban took over the country even faster than they expected. Johnson also said it would have been impossible for British troops to stay in Afghanistan without an American military presence. Texas Governor Greg Abbott has used executive orders and court rulings to fight mask mandates and other anti-pandemic measures. Now he is isolating in the governor's mansion after testing positive for a breakthrough case of the coronavirus. Abbott is fully vaccinated. He's receiving antibody treatment. T-Mobile US says over 40 million customer records were affected in a cyber attack. About 7.8 million current customers had their information stolen. The other information came from past or prospective customers who'd applied for credit. T-Mobile is offering people affected by the attack 2 years of identity protection services. Global news 24 hours a day on air and in Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
We are engaging diplomatically at the same time with allies in regional countries and with the United Nations to address the situation in Afghanistan. We are in contact with the Taliban to ensure the safe passage of people to the airport.
A tense news conference down in Washington, D.C. That was Jake Sullivan, the U.S. National Security Advisor from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. We'll catch up with Anne-Marie Hordern, our Washington correspondent, in just a moment. Your equity market down 6 on the S&P, Tom. We declined a little more than 0.1%. Your equity market a bit softer through the last 24 hours. Yields unchanged, TK, 126.67 on 10s. Your Fed minutes out a little bit later.
Global markets linked into what we see in Afghanistan, and certainly a changed and furious international relations set. Right now, let us look at one of the opinions that we've seen. This is the former Secretary of State, Condoleezza Rice, of course, always associated with Stanford University. Technically, our longest war is not Afghanistan. It is Korea. That war didn't end in victory. It ended in a stalemate. South Korea did not achieve democracy. 70 years later, we have more than 28,000 American troops there, and an admission that even the sophisticated South Korean army cannot deter the North alone. Anne-Marie Hordern has read the document. Anne-Marie, we're beginning to see nuanced opinion. Is anyone defending the president?
It's hard to find someone that is defending the president, Tom, but I have spoken to some congressmen, especially the gentleman from Massachusetts, the congressman who served in Afghanistan, who said it is time that we should be leaving the country. But this is really where the debate, we need to draw that distinction, a line of the debate. The administration certainly wants to have the debate on whether or not the United States should have troops on the ground in Afghanistan. Now, this country has debated that for years, if not over a decade. The debate that many in Washington want to have, and you saw that yesterday from Senator Bob Mendez with a scathing letter to the administration about that they want answers, and there's going to be hearings on this, is about why was this withdrawal and this evacuation so chaotic?
Anne-Marie, it's a look back, and with your work yesterday and that press conference, there's trying to be a look forward. What's the look forward this morning for the Biden administration?
Well, the president returned from Camp David yesterday evening, and today we know that the president is going to have a speech on COVID. Yes, COVID is certainly an issue still for this administration, but for me, that clearly signals that they are trying to move past and change this narrative that is in the press about Afghanistan, because now this has become quite a dark, gloomy cloud over the administration as they are trying to get underway other projects. I would say from yesterday, from that briefing, one thing was very clear to me. This August 31st deadline about the withdrawal is going to be one of those dates we need to watch. They were hesitant to say whether or not that would be extended. They are saying that they're working with the task at hand, but certainly they are working every day to try to get American civilians, personnel, and Afghans out. But there is a date on August 31st, and what we are hearing on reports on the ground in Kabul is that the Taliban is actually now starting to circle the Kabul airport. So are there going to be more troops that need to be extended? The path forward is one that seems very precarious at the moment.
Anne-Marie, a lot of people pointing fingers at President Biden saying, how could he get this so wrong, given the fact that, frankly, a lot of the people on the ground could have predicted that it would have taken a lot shorter period of time for Afghanistan to fall to the Taliban control. Who is advising him as he plots a path forward?
His entire national security team, Secretary of State, his Secretary of Defense. I mean, this is a group of people. You saw there on that picture they sent out over the weekend about who is advising the president. There's going to be a lot of questions on, was this an intelligence error or was this a policy error? The point you make, though, Lisa, is a good one. On July 8th, when the president said it is not inevitable that the Taliban would take over Afghanistan, at that moment, the Taliban actually had more control of districts than the Afghan government. So for many, as you say, it was inevitable. What the administration says was the actual Taliban at the gates, coming into the capital, sitting in the presidential palace where you had Ashraf Ghani just sitting hours before. They said that was shockingly fast.
So going forward, how much credibility has the Biden administration lost? We asked this yesterday. We continue to ask it from a policy perspective, and it's certainly what markets care about. Are we getting any sense of what the answer is today?
I think they've lost a tremendous amount of credibility when you see the letters that are being penned to the administration, and this is not just from the opposition Republican Party. This is from inside his most staunch supporters of the Democratic Party, senators and congressmen and women alike, wanting answers on why this withdrawal was so chaotic and why that potentially the administration put American men and women in harm's way. So that's on the domestic side. And then you have also the international credibility. It seems that the European leaders are just exacerbated with what is going on with the Americans. And you heard that yesterday and this morning from Boris Johnson, the Prime Minister of the United Kingdom.
Anne-Marie, talk to us about the president's approval ratings. Are they starting to go in the wrong direction?
They are. There's an approval rating overnight from Political and Morning Consultant that shows that the approval rating also specifically on Afghanistan has started to sour, where this had wide approval amongst Americans on the withdrawal in April that has now dropped about 15 points. And of course, as all Americans, especially in the age of social media, are seeing with an instant what is happening on the ground. So this is starting to become more worrisome for the president's credibility and approval rating, these images. And as I say, could potentially paint a very dark, cloudy picture over the remaining agenda for his administration.
Anne-Marie, thank you. Our Washington correspondent down in D.C. And Tom, there are two questions at play here, and I keep repeating them. Whether you stay or whether you leave, that's one. That's a decision, a debate. How you leave is a separate discussion. Whether you leave or whether you stay, the president, very much aligned with popular opinion in this country, leave. That's been the case for a long time. How you leave, I think that's where there's been disagreement. And Tom, you can start to see that come through in the approval ratings.
And that's in the zeitgeist this morning. And, you know, John, our job is to police the zeitgeist. And yes, I see a look back to the zeitgeist. I don't think we're ready for a look back. We've got to worry about today at the airport and to try to figure out, as Prime Minister Johnson mentioned, what are we going to do about tens of thousands of people that should or could or will exit? Mr. Macron mentioned in his own interpretation.
Well, you've mentioned a couple of foreign leaders there, Tom. What was interesting about that news conference with Jake Sullivan yesterday, he would asked if the president had spoken to any of those leaders, and the answer was no. He hadn't personally. The president did subsequently speak to Prime Minister Boris Johnson, but Tom, that was yesterday. That was later on. A lot of people disappointed with that.
Yeah, I agree. But to me, the major message for the markets this morning is this is still an ongoing story, even as Anne-Marie mentions, Washington's already in a look-back study mode. What did we do wrong mode?
So for the last couple of months,
right now.
Every morning we've had the same discussion down in Washington. What's happening with fiscal? What's happening with fiscal? What's happening with infrastructure spending? We haven't discussed that now. And that's what you're bringing up, Tom, whether that's faded into the background.
Yeah, and again, I go back to the politics of it. Speaker Pelosi's under siege from her moderates. Her moderates are in districts that really care about Afghanistan.
Futures this morning, down 7. We're negative. A little more than 1/10% on the S&P. Into the bond market, yields unchanged, 126.34. And crude, a bounce off a 4-day losing streak on WTI, 66.92.
Drawdown.
We're firmer by 0.5%. Well, on crude, Tom, to be fair, it actually has been. From New York City this morning, this is Bloomberg.
Drawdown.
Live from New York City for our audience worldwide on TV and radio. Here's the price action this Wednesday morning. Good morning. We are negative on the S&P. We are down by 7 and off by a little more than 0.1% after yesterday's move lower. Major drawdown of 0.7% on the S&P. Just doing that to wind TK up this morning. Nasdaq futures basically unchanged. The Russell, some underperformance. The small caps down by 0.2%. Switch at the board and get to the bond market. We'll set the scene going into Fed minutes a little bit later. Something else Tom is excited about. Lisa mentioned the range of outcomes we could see on a 10-year yield. That Bank of America note. Let's talk about that. I think it's important. They can see a scenario where we end this year at 2% on 10s. They can see another scenario where we end this year below 1%. And they say we sit at the threshold of a major bifurcation of scenarios. And I think that's so important right now. When people scratch their heads and say, what are we doing here at 126.34? What are we doing here? Where do we go next? How can you have conviction about where we go next if you have no idea why we're down here? We can talk about that through the program. In fact, we can talk about that through the year. 192.57 on 30s, yields higher there by almost a basis point. Switch at the board and finish on this. We touched on it yesterday. I want to talk about it this morning. How quickly things can change in a place like New Zealand. One case, 3-day lockdown, then all of a sudden the New Zealand Central Bank has to sit there and say, I don't think we can hike interest rates. They couldn't hike interest rates overnight. New Zealand dollar, Tom, the Kiwi, softer this morning. For the dollar's sake, that's a stronger dollar. The Kiwi down by about 0.4%. And Tom, that's the issue, isn't it? A central bank that wants to tighten monetary policy because they're worried about the economy getting too high. too hot, and then bang, they can't hike rates because the policymakers, the government, has got other ideas, pushing forward with this elimination strategy around COVID. And I say to people who live in America, look at what's happening in China, in New Zealand, in Australia, and how different this pandemic is being dealt with. And I guess you decide which country do you want to live in, Tom. I'm not going to say what my view is right now, but a shutdown after one case, 3-day lockdown, that's a different world, Tom. That is a different world.
It is a different world, and critically, an island nation, which I've always thought changes the discussion. We noticed Ferro nailed the ratio on New Zealand dollar. It is NZD. USD is the numerator. New Zealand dollar, the denominator.
Tom. Thank you. That's just the heritage of the City of London, isn't it?
It is. It's
the
city
FX
of
capital
London.
of the world.
Well, you're a guy with a British accent.
Get your currency pairs right. I
Let's
appreciate
move on right now.
Sometimes.
Let's segue here, John, into what Lindsay Piegza of Stifel is worried about, and that is the strength, the power of the American consumer. We see that in Target moments ago with some very good numbers, a share buyback announced, and, the stocks are churning here on what I'm going to call really, really pretty good numbers. It'll be interesting to see Target's digital presence after what we saw from Walmart and a little bit of digital worry yesterday at Walmart. But we'll give you those headlines as they come in. And go to Dr. Piegza. Lindsay, I look at where we are on the consumer. Is there a clarity to what the consumer's doing right now, or is it a mystery into the end of the year?
Well, I think the consumer is on relatively solid footing. We do see that there's a tremendous amount of wealth that has been accumulated over the past 6 to 12 months, but we also know that a tremendous amount of stimulus, which has been provided on a monthly basis to millions of Americans, is beginning to fade. And I think we see that pullback of stimulus reflected in yesterday's retail sales numbers coming in at a big disappointment.
So going forward, how much are you looking at this idea that we're seeing sentiment decline, like the University of Michigan's sentiment survey showed, retail sales disappoint? How much can we tell that consumers truly are feeling the crimp of higher prices and spending less as a result?
Well, I think they are feeling the crimp of higher prices. As we know, the CPI is up near 6%. This is an incredibly elevated level of cost for consumers. And we see that not only translating into how consumers are shifting the goods and services in their basket, but the overall nominal decline in how they're willing to spend. Now you layer on this growing fear of the rise of the Delta variant, so case numbers, hospitalizations, death rates, constantly stealing the news headlines, creating a level of fear that while we may not go back to the onerous restrictions that we saw during 2020, we are starting to see mask mandates come back in, and even the fear itself could serve to curtail consumer behavior in terms of going out into the market, feeling comfortable interacting in crowds or around other people, and that could slow the recovery in the labor market, slow overall demand in the economy, and of course, by extension then, reduce the outlook for overall GDP.
Lindsay, there's an argument that there's a psychological difference between spending money on higher prices with stimulus checks versus money that you earned. And as the stimulus checks wear off and people actually see that they're spending the money that they get in their paycheck on that much higher food bill, that they're going to spend less and cut back more. Do you see evidence to support this?
I don't know if we see evidence of this quite yet, but we do hear peripheral and anecdotal reports that consumers are increasingly sensitive of spending that hard-earned money as opposed to a check that is coming in the mail. Now, of course, we're sort of splitting hairs when we talk about the decision to spend wealth or spend funds on an elevated priced item, but for the average American, when they see that check dwindle ever so more quickly in terms of filling up the family car, buying groceries, when it is your hard-earned money as opposed to tax dollars, it takes a bigger hit to that mental outlook that you have for not only your financial condition, but for the pathway for the economy.
Lindsay, in the clear and present, there's many people looking at 2021 GDP over 6% off of a boom economy. You've got a more cautious view of GDP under 6% as well. I've got Target giving me high single-digit look forward. Can we get that? Can we get not a soggy economy like 3%, but a less than boom economy as you call for, and still have corporate America do well and have the consumer do well?
Absolutely. I think the back half of the year is going to be noticeably reduced from what we saw in terms of 6.5% across the first 6 months. Now, that's not to say that the economy is losing significant momentum or that the recovery itself is losing footing, but we're looking at the composition of growth. And when you talk about that government component, trillions upon trillions of dollars no longer contributing to growth in the back half of the year, we would expect that headline number to subside. And we are looking for a number closer to 3 to 4% GDP in the latter 6 months of the year. Now, going forward, there's a bigger concern that as we start to see the economy recalibrate and consumers slow down to a more sustainable pathway based on income growth, it's likely we return back to the growth levels that we saw at the end of 2019, early 2020. So prior to the pandemic, which, as you remember, is closer to about 2%.
Let me make a right-angle turn then. If we get a Piegza economy and we get a consumer that's more cautious, more measured, how do they afford real estate?
It's a good question, and it's something that I think policymakers are very concerned about. In fact, we've heard from several Fed presidents argue that asset purchases are no longer helping in terms of job creation, but they're instead mostly helping drive up prices of interest rate sensitive goods, such as homes and cars. And of course, to that point, we've seen home prices specifically have risen dramatically over the past year. The S&P Case-Shiller Home Price Index up over 16% in the past 12 months. And this is marking the biggest gain in available data going back to 1988. So there is a very big concern that a lot of these accommodative policies, both on the monetary and the fiscal front, while benevolent in intention, are actually creating more barriers, more burdens to sustainable longer-term growth for the consumer, for the economy, as we look out to 2021 and beyond.
Lindsay, thank you. We have to leave it there. We appreciate your time this morning. Lindsay Piegza there, Stifel, Chief Economist. Just to turn back to those target earnings, Tom. Comparable sales, comp sales up 8.9%. The estimate 8.18%. The forward look is decent. Second half sales growth in the high single digits. There's a $15 billion stock buyback in the mix, and the stock is down 3.4% in the pre-market. Before we draw too many conclusions on that stock move this morning, Tom, this name was up more than 40% this year coming into earnings, up more than 40% year to date. And the numbers are pretty decent. I'll catch up with the CFO a little bit later this morning.
Well, they've lit it up in the last 5 years, but John, in the last decade, up 21% per year from boring retail.
Running a business, one. An employer, two. I want to talk about this company as an employer, Tom. They had to bring their minimum wage up to about $15 and do it 6 months ahead of schedule. I wonder if $15 in this country gets it done at the moment. TK, how many job openings are there over at Target? I couldn't agree more.
It depends where you are. Peter Coy, writing up the New York Times, we thank him for all of his work for years at Bloomberg, and Peter Coy goes right there, John, on wages. And the answer is it's hugely regional, hugely regional.
Lisa, $15, does it get it done?
For who, right? I mean, I think that as you see the big chain stores start to increase their minimum wages, how much pressure do you see that in local businesses to compete, especially with the labor shortages? And you're hearing this on the margins from companies that have a smaller footprint. I also want to just say, to sort of add on to your point here, profit margins did tighten here. Interesting to see what the CFO will discuss with you in terms of going forward, how much that will continue to tighten, or if they have the scale to maneuver through this and will be able to consolidate business as others struggle.
So they raised their outlook for margins earlier this year, and I guess the question for Target and others right now, if you expect the price pressure to persist, do you think the consumer tolerance for higher prices will persist as well? That's the unknown into the new year.
And this is why it is so interesting that we're getting the Delta slowdown in tandem with increasing worries about inflationary pressures. Because if you get these two aspects together, that could both pressure sales at the same time that consumers are seeing these higher costs. It might reduce their willingness to absorb some of the higher stickers.
The headline numbers out of Target, pretty decent. The stock is down by 3.4% this morning. On the year, it's up by more than 40% coming into today. We'll catch up with the CFO a little bit later, around about 9:15 Eastern Time on Bloomberg TV. It's the price action. Futures down 4 with negative 0.1% on the S&P. Your bond market unchanged at 126.50. Yields not doing much at the moment. Crude a bounce back up 0.8%, 67.11 on WTI. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro on a beautiful morning in New York City. Good morning. This is Bloomberg.
With the First Word News, I'm Laura Wright. The US is trying to keep the Taliban from accessing assets belonging to Afghanistan's central bank. The Biden administration has frozen almost $9.5 billion in Afghan accounts. The Taliban remains the Treasury Department's sanctions list. The Taliban is breaking with its own past in Afghanistan. A spokesperson says the group will prevent Afghan territory from being used to target any other country, especially the US. There has been concerns that terror groups such as Al-Qaeda would be allowed to build a base there. In Haiti, Tropical Storm Grace forced a temporary halt to earthquake search and rescue efforts. Authorities warned some areas in the quake zone could get up to 15 inches of rain. The death toll has now been raised to more than 1,900. Almost 10,000 people were injured. In the US, COVID vaccinations have now risen to levels not seen since the spring. The number of Americans getting a first dose of a vaccine has climbed to almost 500,000 a day. The new bump has been driven by counties in the South, which earlier in the year were among the most resistant to getting the shots. The region has been hit by a fast-moving wave of infections that has sent thousands to the hospital. For American investors, Chinese stocks are becoming the asset not to own. Influential investors like George Soros have trimmed their China exposure, and Cathie Wood's flagship ETF no longer holds any such shares. One of the world's largest hedge funds, Marshall Wace, says Chinese ADRs are uninvestable. A big reason, pressure from regulators in both the US and China has intensified. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
What I'm concerned about is those certain states that have not enough of their high-risk population vaccinated, putting their hospitals into crisis. What we have is a regional problem, and those hospitals are under stress in those states in the South where they're getting inundated with totally preventable COVID-19 cases.
Dr. Amish Adalja there, Johns Hopkins Center for Health Security Senior Scholar from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market down 3. We're negative with softer. We're lighter by almost 1/10% on the S&P 500 after yesterday's massive move lower, down 0.7%. Just baiting you a little bit, Tom. No response. 126.84 on 10s. Yields up almost a basis point. And in the FX market, TK Euro Dollar unchanged at 117.16. Crude bouncing back 0.9%, 67.17.
A lot of cross currents right now. Not to use the cliche, but it really works here, John. Just lots of back and forth, don't you think?
I think Bank of America nailed it, didn't they? We're at the threshold of what could be a major bifurcation of scenarios. We could have a situation, as Lisa pointed out, where yields end the year north of 2%, a situation where yields end the year south of 1%. That's a difficult environment to operate in.
It is, and that's a key point. Corporations will adapt, and my optimism comes from corporations are malleable. They'll make intelligent decisions. She always makes intelligent decisions on this horrific pandemic. Bhakti Hansadi joins us now with Johns Hopkins in emergency medicine, but much more than that, a student of medicine. Bhakti, we have a Colorado River that's drying up. We have a drought that's unimaginable. You see the headlines and you go, really? So then this morning I saw a headline and I went, really? Alabama has negative ICU beds. Do you detect an outrage in the South that links the medical establishment towards the people that desperately need to get vaccinated? Is the outrage there?
Definitely. There is empathy fatigue. Healthcare providers are burnt out, and there is a lack of beds. And the challenge is, it's not only people don't die of just COVID. People are still having heart attacks, strokes, sepsis, injuries, and there is insufficient resources to treat all those other people who may be vaccinated, who don't have COVID, but do definitely have medical emergencies.
Meanwhile, we're seeing some good signs here, an increasing number of people getting vaccinated. The U.S. COVID vaccination rate rose to levels not seen since the spring, led by, get this, the South. How much is this the silver lining, if there is any, about the uptick in cases, that we are seeing more people get vaccinated, particularly in more hesitant areas in the recent past?
The silver lining really here is that we are busting that myth. COVID is a real disease that gets people really sick, and vaccines protect against those real diseases that get you really sick. So the silver lining is we're now taking COVID seriously, which means people are getting vaccinated. Will it be adequate? I don't know.
So going forward, Dr. Hansati, how much are you concerned about the uptick in other types of illnesses, the fact that people are going to be spending more time inside as it gets colder? Have we seen the worst of it, or do you think that we're on a pretty scary trajectory at this point?
So, there's like the whole moving to indoors and then being closely exposed to individuals. And we did see our last surge during those winter months. But the other challenge is that during the last surge, we had lockdown, people were not exposed to influenza, RSV, and rhinovirus. What we've seen in the pediatric population is that those diseases are coming back with a vengeance and are higher numbers and out of the normal seasonal range due to our lack of previous exposure.
Bhakti, the trend here is we're all putting our masks back on. It seems to be a nationwide trend. And I think the math is X% are vaccinated, and there's this positivity rate, and then there's the mix of a given society. Should we be putting our masks back on?
Yes, absolutely. That is the CDC recommendations. It's time to put our masks back on.
Well, give us the why, please, because a lot of people I talk to are like, why?
Sure. So there's a couple of different factors here, but we know that preventing transmission is a two-part coin. The vaccine gives you some antibodies. It's not 100% effective. And as longer you are out from your vaccination, the lower those antibody levels will become. The second part of it is decreasing opportunities for transmission, both physical and social, which means social distancing greater than 6 feet apart. And masks are a permanent barrier that prevents transmission of the virus. It makes sense to put masks back on.
You've got a lot of people, particularly with children, who say we don't want our children wearing masks in school. Their school experience needs to be more positive than that, especially after what we saw last year. Rick DeSantis, governor of Florida, has been incredibly controversial, actually banning mask mandates, and this has created a whole rebellion among the Florida school system. What do you say to people who argue stop making the children the front lines? I mean, on one hand, people would, we always get a lot of hate mail from people saying, why are you encouraging your children to get vaccinated? Well, that's what the science shows. Can you give us a sense of what the science shows behind children wearing masks?
So it's not binary, right? Safe, not safe, good or bad. But we can make schools as safe as possible for in-person interactions. And a way to do that is pods, regular temperature checks, symptom screening, and masks. I would say, yes, masks are not ideal, but they're not harmful. We have known children to go to school wearing masks. I have a 3-year-old who is consistent with her mask, has enjoyed fruitful interactions, has become joyful since we've started in-person activities. I don't know that there is any science or evidence that shows that masks are harmful, but yes, it would be preferable to have our children going to school, playing in that playground, just how they used to be, but we're not there yet.
Doctor, let's hope we get there soon. Doctor, thank you. Dr. Bhakti Hansati there. Johns Hopkins, Associate Professor of Emergency Medicine. Sometimes my job is to try and translate Tom Keene for everyone, Lisa, not just for you.
Thanks.
Just wrote a message that said 5'11" Luis, and the only thing I can think is that's a Yankees reference. Would that be right, Tom?
That would be right.
That's a Yankees reference.
Twitter is lit up like a candle over the August fold. The good news, John, to show you the Red Sox optimism, the good news is the fold's happening in August and not in April.
Can I just point out, John, that you had to translate this while we were talking about COVID?
This is Luis Gil, I believe
the job
it's pronounced.
sometimes as well.
This guy's like 15 years old and he came in and got it done yesterday.
So we had a Yankee
doubleheader.
sweep. Is that right, Tom? The Yankees
it's a sweep. It's a doubleheader. They were 10 and a half back. On radio, I'm doing the games behind hand thing. They were 10 and a half back, John, and with the trades and that momentum, they've just brought it on, and they're now 1/1000th of a decimal point ahead of the Red Sox. It'll be fun into the end of the season, and the Yankees look off.
Is that called the wild card spot, Tom?
That would be good. It's
That's
a
to
wild
get into the
card.
playoffs for the so-called World Series that the American teams play in.
The Red Sox are even being discussed for this is a great plus over last year. but the Yankees look awfully good right now.
Big question really is my baseball knowledge better than your soccer knowledge? I think
there's no question about that, John.
I feel a Twitter poll coming on.
We should do a poll on that, shouldn't we?
We should.
What happened to Grealish with Man City? They're paying him, what's he get, like $50,000 every time he touches a ball?
Something like that.
What happened?
It's not happened yet, has it? One game into the season.
I watched the highlights.
Spurs. You're still watching the highlights of that.
But watched like 8 times. Man City was a lowlights. It wasn't highlights.
Are you
it was
bored
lowlights.
this week? Feels like you are. Tom Keene, Lisa Abramowicz, Jonathan Ferro, so much more still to come. Got 2 hours of this.
Way to tease ahead.
This is Bloomberg.
Go Newcastle.
A lot of the market is already corrected. The 5 to 10% correction we were looking for has been happening internally.
This feels more like coming down from stimulus payments than it does reflecting Delta variant fears.
This is going to be a grinding market, one where the biggest challenge continues to be for investors to stay in the market.
We're starting to see the foundations now of a significant boost in productivity for the next 2 or 3 years.
We know that a taper is coming. The biggest disagreement on Wall Street right now, is it September, is it December? Guess what? It doesn't really matter in the grand scheme of things.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
What a low conviction market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market totally unchanged on the S&P after yesterday's major drawdown, Tom, down 0.7%. On a more serious note, every morning we wake up, we head down to DC and we discuss Afghanistan. It's the one thing we do not discuss that you wonder, Tom, starts to shape this market. We have stopped talking about infrastructure spending, fiscal spending down in Washington.
There's a high conviction August here, and the news flow is absolutely extraordinary, John. And I look at the market in the pause today. Yes, Swiss franc a little bit stronger, red and green on the screen right now on equities. But, John, this is the day where we begin to link off the shock of Afghanistan. Yes, the op-eds are coming in, Condoleezza Rice in the Washington Post and others, and there's this, that, and the other thing. You know what? It's all linked in together into confidence.
You talked about the administration looking shocked, Tom. An administration may be overwhelmed, overtaken by events right now?
Yeah, OBE will go there. Overtaken by events, absolutely. And the question is the leadership and governance and visibility after the president made those first tentative steps the other day.
Lisa, day to day, pushing forward over in Afghanistan.
So Joe Biden really had a reputation of quiet competence, right? He wasn't very flashy, but he got the job done. And one thing that a lot of political analysts are saying is that the situation with Afghanistan really threw that into question, this idea of how could he not have known that it was going to be a quicker takeover by the Taliban? How come he didn't do more to get some of the people out of Afghanistan before that who had helped the United States? And so this really goes into the infrastructure discussions. How can he be certain that inflation is transitory or that this is going to be positive for the nation? It just sort of undermines a certain level of credibility when he needs it to a very high degree.
And Tom, the issue at play now for the president and this administration, the approval ratings are moving in the wrong direction, and a lot of this predates what's happened over the last week.
Get the calendar out, John. That falls in August into Speaker Pelosi's challenge with the president under siege and then the House and the Senate into the election. And maybe that's all pulled forward where the primary season for 2022 begins a lot earlier because of Afghanistan.
Relatively calm in the market this morning compared to what's happening elsewhere for sure.
Yes.
Relatively speaking, your equity market is unchanged on the S&P 500. Yields are higher by about a basis point or two to 127.67. All over the place over the last few days, just lower. Friday, lower by 8 basis points, lower again, just trying to get your hands around what's going on in the global economy and what it means for the Treasury market. Tremendously difficult. We do have a bounce back in crude, Lisa. WTI up by almost 1% now to 67.23.
It is confusing, and it's hard to have conviction when it's not a domestic market for some of these assets. I'm thinking of Treasuries in particular, and that Treasury International Capital report that came out earlier this week showed a lot of foreign buying in the United States debt market, just throwing another level of uncertainty into the dynamics here. Meanwhile, with respect to economic data at 8:30 a.m., we get more data on the housing market. Remember, yesterday, home builder sentiment fell the most in 13 months on these higher prices that are crimping the buying power of consumers, as well as, of course, input costs and higher construction costs. Then at 8:30 a.m., former Treasury Secretary Jack Lew to join Bloomberg Television. John, you were saying that we have not been talking about infrastructure. We will talk about infrastructure with Jack Lew. We will be talking about the potential implications for the Afghanistani policy in terms of getting some sort of infrastructure bill passed, as well as global outreach to combat the Belt and Road Initiative of China. How much is that an important thing for the U.S. to do as it tries to counter the Chinese prowess and trickling into other nations in terms of financial aid? And at 2 p.m. we get the Fed meeting minutes. I am curious to see how much they give some sort of indication of how long they will need to see these labor market reports increase before they can start tapering their bond purchases. Do they start to get worried about higher food prices, given the fact that that is crimping sentiment among consumers and leading to higher inflationary expectations, which tends to be a self-fulfilling prophecy, John?
Lisa, thank you. Do you know who's concerned about higher prices, inflation? The boss of the #1 wealth fund on the planet will catch up with the boss of Norway's wealth fund, Tom, in about 30 minutes' time, and that's a key topic for them. They manage real money, 1.4 trillion.
They manage real money, and they're very visible. What's really cool about this, folks, is there's X number of sovereign wealth funds, 5, 10, whatever the count is, and this is sort of the leading mold of visibility. So, John, I'm looking forward to it.
Nikolai Tangen, about 25 minutes away on this program. Our guest this morning, Chris Harvey, Wells Fargo Securities Head of Equity Strategy. Chris, I started with a quote a little bit earlier on from Bank of America. Lisa mentioned the note too. This line here, we're sitting at the threshold of a major bifurcation of scenarios. Does that resonate with you right now, Chris? Is it difficult at the moment to look forward?
It's not difficult to look forward, but I do think there's a lot of uncertainty. There's uncertainty about the economy, there's uncertainty about rates, there's uncertainty about COVID, and just the market in general. And so what we think is you do have to barbell a strategy, and part of that barbell is an anchor and low volatility. We think you want to put some more risk aversion in the portfolio, and we think you need to do that in a low volatility type fashion.
Well, what is that? Buying T-bills?
No, Tom, not buying T-bills. In the equity market, when we talk about low volatility, you can look at it a number of different ways. There's some traditional low volatility sectors, utilities, staples, pharma, or what you can just do is you can look at less risky stocks. Things like maybe Mickey D's and things of the such. And what you want to do is you want to lower the volatility of the portfolio. And typically when you lower the volatility of the portfolio, it does provide some type of protection. When the market goes down, these things typically outperform, and it is a good anchor for the portfolio.
Chris, what would you say to people who would push back and say there's so much cash in, for example, money market funds? People are not fully invested, and people have been cautious, and we've got this wall of money. Rates are going to stay low. You know, honestly, it makes sense, but fundamentals have not made sense, and buy stocks has been the correct trade. What do you say to them to give them more caution and convince them that people are not going to swoop in and just buy the first dip that they see?
Well, it's funny. I can't tell you that they won't buy the first dip. That's what they have been doing. I just look at the market, and the market's making all-time highs. I look at the bond market, and bond market's telling you something funny. I don't know if it's telling you that it's all Fed-driven. I don't know if it's telling you something economic, but there's a lot of uncertainty there. We had retail sales the other day, some uncertainty with the economy, and so on and so forth. I think this is a time where you need to be prudent. You need to be cautious. What we're saying is you want a barbell, right? Low volatility with something else. That something else for us is higher COVID beta. We do think a lot of these stocks that are tied to the reopening, that are more cyclically oriented, will do well. They have pulled back. We look at the underlying fundamentals, they're good. We just don't know the timing. And so what we want to do is we want to mitigate that timing risk with that low volatility.
Chris, are you de-emphasizing your year-end price target?
Listen, John, nobody needs, so we're wrong. We missed it, right? So where are we going to, if we have a call that is either really, really high, we're going to go out and make it. But who needs us to go back into the consensus? Where do we want to spend? Our clients aren't saying, Chris, what about your price target? They're saying, Chris, How do I position for the next 4.5 months? And this is where we spend most of our
Chris,
time.
that's why I asked.
Positioning.
I just thought that maybe did shape your views on the year ahead. I wasn't taking a dig. I can see you're very defensive about it. Tom, do you like how he dealt with that? Listen, John.
Yeah, you know.
It's not about the year-end price target at 38.50.
Arms crossed.
You know, Chris, it's great. The rude Englishmen were right for it. Let me try to solve this, Chris. You have to write about the ratios of the market as you recalibrate and readjust to the cards you're dealt. What part of those ratios matters the most forward?
All right, let me, I don't think I'm going to answer it directly, but let me say this. What we are watching right now, there are two main drivers or two main catalysts for us. It's tapering and it's COVID. So we're watching the weekly COVID numbers, we're watching the mortality rates, we're watching early states.
What about earnings? Are you watching Target as an example?
We are watching earnings, we're watching revisions. There was a lot of talk that revisions would top out. Revisions haven't topped out. We think revisions still go higher. We still think that numbers have been very conservative. We still think that what's keeping this back, and this is not a surprise, is the supply situation. Eventually that's going to work out. There is a ton, as Lisa was saying, there's a ton of cash on consumers' balance sheet and corporate balance sheets. That eventually needs to go somewhere. But more importantly, what we need to talk about is we need to normalize rates at some point in time. The Fed owns close to 25% of the Treasury market. If the Fed owned 25% of the S&P 500, where would valuations be? We need to start normalizing that. So what we need to do is we need to watch claims numbers, we need to watch the employment situation, and we need to get back to a situation where the cost of capital is decided more so by the capital markets than by the Fed.
Chris, before we go, can we just confirm for everyone that we are friends? We do go to line. Should we just
He's like, nope.
John, you tell me.
Oh, Chris, we're friends. Come on. Chris Harvey of Wells Fargo Securities, Head of Equity Strategy. If you want to wind up Chris today, if you're a client, please email him and ask him about his price target of 38.50 on the S&P 500. Your equity market right now, Tom, unchanged on futures. I think what Chris had to say there at the end is really important. At the start of the crisis, the goal of the Federal Reserve was to divorce financial conditions from underlying fundamentals. Fundamentals have started to pick up in a material way. You've seen that in the earnings over the last 12 months. Now it's about the handoff. The handoff is always difficult, and it does not come, Tom, without volatility.
Well, it doesn't come without volatility, but I'm going to go back to the GDP call and what corporations do with the nominal GDP that they're given. And to be honest, John, there's a huge uncertainty over that Q4, but what about Q1 of 2022? I see no vision there.
Well, talk about reopening. It went from April 2020,
yeah, exactly,
May 2020, yeah. And Lisa, now we are having a real conversation about maybe getting back to normal, whatever that means anymore. Maybe next year?
Yeah, but the bifurcation between inflation running too hot and posing a real problem for the Fed versus this idea of whether we potentially don't reopen or have a sort of an increase in the Delta variant. Huge
so finely balanced.
Here.
I just totally agree with you this morning.
I do. I agree that
this morning.
We can say I don't drink coffee. I take tea, my dear. It's a rude Englishman in New York. That's what it is.
Thank you. Nice reference to Sting there, Tom.
That was nice. Well,
Thank you.
Channeling Sting.
I never understood the toast on one side thing, though. I don't know anyone who does that.
It's an Englishman in New York. Bonus round, he's rude. I think we've got an image of the Thames for those.
People are going to write in and agree with you.
Oh, the River Thames.
I think is that the East River, Tom?
No, nailed that, John.
It's the Hudson. No, I can see the.
For those on radio, it's the George Washington Bridge.
Something goes on up there, Tom. I'm not sure what.
Yeah, actually, we can see Lisa's. Lisa's there in the San Marco.
Brian, Nick of Nuveen. Let's get out of here. This is Bloomberg.
With the First Word News, I'm Laura Wright. The Biden administration says it has cleared the way for Americans to travel to Kabul airport to leave Afghanistan. U.S. officials say they have the assurance of safe passage from the Taliban. About 11,000 Americans have said they are in the country. Roughly 3,500 U.S. troops are on the ground providing security at Kabul airport. There are also numerous Taliban checkpoints there. Once again, Target has topped Wall Street sales and earnings expectations. Still, a slowdown in growth raised questions about how much longer those results can last. Target has arguably been the biggest winner among major retailers during the pandemic. Its stock has surged more than 40% this year, but it hasn't outperformed expectations in the way it did in 2020. Lowe's raised its full-year forecast after posting better than expected quarterly sales figures. Gains in the home improvement chain's professional business helped offset a slowdown in demand from do-it-yourself customers. Lowe's performance contrasts with the weaker than expected results from rival Home Depot.
We get to make our decisions independent of political control, direct political control. But if we're going to expand our role beyond what Congress has assigned us, then that weakens the case for holding on to that independence.
The chairman of the Federal Reserve, Jerome Powell. Chair Jay Powell will be talking again next week in Jackson Hole, Wyoming. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Your equity market this Wednesday morning, down about 1/10%. We're -3, call it -4. We're a little bit softer after yesterday's move lower on the S&P by 0.7%, snapping that 5-day winning streak in the equity market. Into the bond market where yields start to lift just a little bit on 10s, on 30s. A bit of a steeper curve here. Yields up by a single basis point, so 127.17, and I think it was a 4-day losing streak into today on WTI crude. A bounce back this morning, Tom, up 0.9% to $67.21.
I'd really emphasize not a snooze fest, John, but nevertheless a churn to the markets this morning. Do you agree?
Not a snooze in crude, and it hasn't been now for the last several weeks, and it's worth looking at what's happening in commodities, Tom. Not from the supply side, which is something the government wanted to talk about just a week ago, but on the demand side, given what we've seen taking place in China, a lot of people starting to reevaluate their demand projections for Q3, Q4 because of that.
Maybe a lot of reevaluations as well, not only as we hear from our allies on Afghanistan, but certainly the news flow out of Washington, extraordinary. Emily Wilkins with us on the damage done coast to coast. Emily, at 114 Mill Street in Hookstown, Pennsylvania, there is a post office. Connor Lamb, who's in the heart of this, is a moderate Democrat in the Senate race as well, asked for the Staff Sergeant Dylan Elkin post office because he died southwest of Kabul 2-3 years ago as well. This disaster permeates all the way to Hookstown, Pennsylvania. What's it mean for the moderates of this nation?
I mean, it permeates all over the country, Tom, and I think you see that in the response that you are now seeing from members of Congress. While there's certainly a slight difference in rhetoric between the Democrats and the Republicans, you are hearing Democrats really come out and say, hey, this withdrawal, it was a mess, and we want to look into it. You're beginning to see the heads of the foreign affairs committees in the House and in the Senate say they will be holding hearings. Right. They're going to be calling the Secretary of State, Secretary of Defense. They want to get to the bottom of why the withdrawal from Afghanistan played out and is playing out the way
that's the look back. I want to know from you the look forward here for moderates. Can you assess that now, or do you just have to wait a number of days?
To be honest, Tom, I think we are all waiting in Washington to see how this plays out. Certainly, Afghanistan, there are many people across the country, they know someone who served, they know someone who was involved. But the thing about it is that if you look at polling, and this is consistent across time, about how Americans feel towards Afghanistan and other international issues, it never quite reaches the same priority level as it does for those domestic issues. And that, I think, is why you're seeing Congress continue to push forward with President Biden's agenda, even while a number of them criticize how his administration withdrew from Afghanistan. They realize that even though they have concerns about what's happening abroad, back home, it's important to get those roads, those bridges, that broadband, childcare, elder care, Medicaid expansion, Medicare expansion.
Sure.
And so I think that's why you're sort of seeing this dual process where Democrats in Congress are criticizing the administration, but they are also working with them to pass their agenda.
Sure, there has certainly been an increasing internal inward focus by the United States and frankly a lot of nations around the world over the past few years. There is a question, though, of the importance of having alliances, strong alliances with nations that we've traditionally traditionally been friends with in order to shore up supply chain issues and trade generally, in addition to other situations. From an international relations standpoint going forward, is there more pressure now for the United States to export some of the vaccines that we have in order to try to resurrect some of the confidence that people have in the United States?
Yesterday, we heard White House Press Secretary Jen Psaki say that the U.S. is going to be doing both, going to be administering that third vaccine booster shot, while also continuing to get vaccines to poorer nations that don't have the number of vaccines that the U.S. has. But the U.S. is still coming under heavy criticism for this decision to pursue this third vaccination shot. I mean, there are so many nations, including some that are our close allies, that really only have a small percentage of their population vaccinated. And there's also a sense that if we really, as the U.S., want to make sure that we're seeing the end of the COVID-19 pandemic, we can't just worry about vaccinating Americans. We have to make sure that the rest of the world is vaccinated as well. So that's definitely something to pay attention to later today when President Biden makes his address. How much does he focus on that third vaccine shot? How much does he focus on the international?
And we have enough, just to be clear, the United States has enough for that third booster shot and is currently planning to roll that out in about a month. Is that correct? I've heard conflicting messages.
So we don't know exactly right now what the timing is going to be. We're still looking for FDA approval of that third shot, but we are hearing more messages from the CDC and from the Biden administration that they do believe that that is the way we're going to need to go forward.
Emily Wilkins, we have to leave it there. Down in Washington, our Bloomberg government reporter. We started this hour, Tom, by talking about whether this administration has been overtaken, overwhelmed by events in Afghanistan, and would it derail the effort down in D.C. to do something at home, domestically speaking. We've had a range of opinions on that, Tom. I have to say, a lot of people divided on the outcome of all of this.
Yeah, it's going to be, there's a lot of different opinions here, John. There's no question about it. And I go back to what corporations are doing as we synthesize in all this together. I mean, now we're synthesizing in the international story.
They're adapting.
John, can I ask a question which I think is really germane?
Sure.
Has Jackson Hole changed?
In what way, Tom?
Just what we're going to be looking for here, given the slowdown in the economic data and given this international shock that we've seen.
Well, it's Operation Do No Harm. It has to be.
Yeah.
Tom, if you look at New Zealand, and this is an extreme example, that was a central bank that wanted to tighten monetary policy. And just like that, the day before the meeting, the Prime Minister institutes a 3-day lockdown. That's how quickly things can change. And I think for that reason, do you remember Chairman Powell talked about being in a dark room? And when you're in a dark room and you start to move around, you've got to move more carefully. I think that's the environment they're still in. They're in a very, very dark room, Tom, looking out to next year at a time when there's a lot of price pressure, really pushing them to move more quickly.
Well, we're going to have to see here. I mean, just the basic idea here of the dark room means we need to provide clarity, John. And I'm pleased to announce that, well, when you go west and you think of the tumbling tumbleweeds of Jackson Hole, you think of like Roy and Dale, which, John, is before your time. That would be Roy Rogers and, Dale Evans. And, you look at that and you say, well, that can work, except we're going to do better. I'm pleased to announce that we're taking surveillance to Jackson Hole to get in Michael McKee's way.
Lovely. So that's you and Lisa.
It's not Roy and Dale. It's going to be me and Lisa.
You haven't booked a flight for me, have you?
No, but I think Lisa's got a little bit of Dale Evans in her where it's really going to work.
I had no idea where you were going to go with this. I was going to ask John to translate.
Did you know that you were going, Lisa? Were you aware?
I was aware. I think that
Tom Keene just made this announcement.
Yeah, exactly. I'm shocked.
I won't be with you.
We're looking forward to it.
I'm sure Lisa is too.
Mike has some terrific conversations.
You're like, thank goodness I'm not here.
We got to learn the lyrics to Tumblin' Tumbleweeds, Lisa.
And Lisa's really excited now after that tease. The promo for next week. I won't be here. They'll be in Jackson Hole together from New York. This is
the Daughters of the Pioneers.
Live from New York City for our audience worldwide on TV, on radio. This is the price action this Wednesday. Good morning. Price action looks like this. We're -4. We're down 5. We're off by about 1/10% on the S&P. Firmer on the Nasdaq by 1/10. Basically unchanged on the Russell, the small caps. Not doing much at all. It's calm out there in the equity market so far, at least. If you switch up the board and get to the bond market, 2s, 10s and 30s shaping up as follows. 127.34. Yields are higher by about a basis point on 10s. Similar move on 30s, up by almost 2 basis points there to 193.59. Bit of a steeper curve, sell off at the long end, but it's a really muted move this morning on the back of the Treasury curve. Let's get to the commodity story, Tom. This is what I want to sit on briefly. WTI coming into today, down for 4 straight sessions, 67.39 right now. It's a bounce back, up by 1.2%. But the calculation has changed for a lot of people in this commodity market, Tom. They've had to rethink what demand looks like out of China, because places like China are still pushing forward with a COVID elimination strategy. And when you do that, your tolerance for cases is so much lower. It doesn't take much to move the dial then on what restrictions mean for demand going forward.
Well, on a Brent crude basis, from the high there of second week of July, maybe first week of July, John, you've got a $77 on the way down to $69. Is that a trend? I'll let others decide, but I do take your point. John, I read a briefing yesterday on where China gets its oil. And it's remarkable how international their oil acquisition is.
Including some places, Tom, where some people think maybe they shouldn't be getting that crude from, but that's a conversation
different
for a little bit later. 67.45, crude up by a little more than 1%. Ton of earnings to get through as well. Let's do that right now with Romain. Morning, Romain.
Hey, good morning, John. A lot of earnings coming out of the retailers today. Target beating on most of the main metrics, about 8.9% growth here on those comp sales numbers. The e-commerce sales were up about 10%, but there is some concern here about that slowdown. This is the narrative that, of course, we've seen from so many retailers that were posting triple-digit growth rates, of course, during the pandemic. Obviously, that's not going to last. Target now guiding towards single-digit comp sales growth for the rest of the year in the second half here. Of course, for a company that's a $100 billion company, anybody would take that. But again, investors sort of need to figure out what the new normal is going to be and whether they can adjust to that and whether they can adjust those valuations. Lowe's, a similar story here, but you're seeing a different share reaction. Those shares higher here by about 5% here in the pre-market. That seemed to have a lot to do here with some of the gross margins and the idea that those margins are actually guiding higher, at least based on what the company is telling investors. TJX also crossing the wire just now. Comp sales up about 20% here. That's well above what the street was looking for at about 14%. The company flipping from a loss to a profit here on an adjusted basis for the quarter as well, also expanding its buyback program. After the bell, we're going to get more earnings, probably the 2 biggest companies that people are going to keep an eye on. Nvidia obviously making a ton of money off those data center servers as well as those gaming servers. And more importantly, they're actually making a lot of money off of this chip shortage. It's really worked to their advantage. Gross margins there expected to actually get up to about 66% based on analyst estimates. The question, of course, there is the sustainability and whether this company can actually diversify itself away from some of those servers and into new businesses like the automotive sector. And then Robinhood, we're going to get the first report out of Robinhood since it went public. We've already seen industry data on some of that payment for order flow business industry-wide. That was down about 23% in the quarter. We'll see how that affected Robinhood's results.
Romain, thanks so much. Sovereign wealth fund discussions are usually pretty dry, pretty bureaucratic. You can't do that with a Norwegian sovereign wealth fund CEO. John Ferro, you're going to have a discussion with a guy truly outstanding at absolute return in the hedge fund business, and quite the controversy as he took over at Norway's large pile of money.
Tom, this one is a monster. It's $1.4 trillion, and I'm pleased to say that Nikolai Tangen joins us now, the Norwegian Sovereign Wealth Fund CEO. Nikolai, great to have you with us. You made some headlines over the past week with this quote. I'm going to read it for our audience. I think probably inflation is the biggest threat to capital markets that we are seeing now. It will probably hit the portfolio in a way that we have not seen before. Nikolai, what did you mean by that?
I mean that we are at a situation now where the bond yields are extremely low and the stock market is extremely high. And so therefore any main change in inflation will hit both part of the portfolio, you know. And in the past it hits one of them and not the other. But this time it can move in, both can move in the same direction.
So do you have to do things differently now with that in mind?
Well, we are a very long-term investor, you know, and we are so big it's kind of difficult to move around, and we are in a way also too big for counterparties. So given that we have a time horizon for our investments of 30 to 100 years, we will probably have to sit through it.
You understand more than most. It's not what you own, it's what you choose not to own. When you're this big, Nikolai, what are you choosing not to own right now and why?
Well, we are quite index near in the way we run our portfolio, but we also have various things that we don't own for ESG reasons. We started to sell down various things already back in 2012, and that's been a good strategy for the fund. So that's something we will increase going forward.
What does that mean for the regional bias going forward as well, Nikolai? I'm thinking about China, EM. Do you have to reduce that because of ESG concerns?
No, not necessarily. We have roughly 5% of the fund invested in China. It's it's one of the biggest markets in the world. It's done really well for us, and so we continue to be invested there.
Some people call it uninvestable. I've heard that from Marshall Wace over the last couple of weeks. I've heard it from others too. Do you think it still is investable, and why?
Well, I think it's investable. You have a lot of great companies there. You got some good technology companies there. So we have large positions there, and we really believe in a lot of those business models.
The regulatory shift, though, can happen overnight. Nikolai, to believe in the business model, you have to have some predictable regulation there as well. Some kind of certainty looking forward several years through your time horizon, a whole lot longer. Do you have that with China?
Well, I think we have uncertainty all over the place. We have uncertainty in all markets. So it's the nature of it is a bit different in China, but that's life as an investor.
Do you think things are changing more rapidly over the last couple of weeks there, the last couple of months?
Yeah, things are changing quite quickly. We got people on the ground. We got good PMs who are looking at these things and they make the necessary adjustments in the portfolio.
Well, let's talk about your PMs. You've brought on sports psychologists. I know this is an area of interest for you to prepare your PMs for things maybe they've not been prepared for. Can you walk me through how you're managing the people within the fund and the changes you're trying to make?
Yeah. So we do this despite me being pretty pathetic in sports, right? So I have absolutely nothing to bring to the party as an athlete. But I have seen how sports psychologists can help us do different things. Because what we do is very tricky. It's high achievers and so on. And I would say the main parts is it's resilience and it's bounce back ability. How do you get back when you had losses? How do you manage to take the same type of risk even when you've been through a tough patch? That's the key, I think.
Nikolai, can you give me an example, a real life example in your times managing money where that has helped, where you've seen that change develop with a PM?
Well, it's helped me, for instance, during the last 8 to 10 years, where I have actively used a sports psychologist. Has made me come through in a mentally better state. Some of the really volatile periods. I think it's a complete no-brainer.
Going forward from here, you're also listening to earnings calls. I know you've done interrogation training over in Norway as well. Nikolai, just give me a flavour of that. How helpful that is to understand the kind of questions you need to be asking on an earnings call, what you need to be listening for, the tone of the delivery from the C-suite, and the kind of red flags you'd be looking for on calls like that as well.
Spend kind of 10 years learning it. It's not something you could just kind of teach in 6 seconds. But everything from just how you ask questions, that you don't link together different types of questions, that you look at what managements are not answering as much as what they actually are answering, looking for very small words called qualifiers and so on. Just a whole range of techniques that we need to apply here.
Nikolai Tangen, very, very experienced managing money, and it's good to catch up, sir. Big returns over in Norway, the Norwegian Sovereign Wealth Fund CEO, with some solid returns, close to double digits, Tom, over the last year. And if you broke up that fund for every single person in Norway, you're talking about $280,000 each, Tom. 1.4 trillion split between 5 million. Unbelievable size.
Yeah, the hedge fund guy got the tech call right. And to his great credit, after he got the tech call right, he said, now what? And what I'm gleaning there, John, is a now what's a little opaque. I would say, to your good question on emerging markets, I'm really fascinated to see what they do in some of the more obscure emerging markets, and some of that, frankly, going from this, let's call it the Middle East, all the way over through the stands, Turkmenistan, Uzbekistan, and that, all the way over to India. I'm fascinated how they do that long term.
Lisa, the issue for a sovereign wealth fund, when you own 1.5% of global equities, you're in everything. You're choosing what not to own. There's some big ESG concerns that have been talked about so much with Norway. We don't need to go over that again and exhaust the issue. But on this particular issue, Lisa, you end up owning everything. So you can say that inflation is the big factor right now we need to be concerned about, but you hold your hands up and you've got to say, there's not much we can do about it.
Which is the reason why you asked about the executive calls, right? I mean, how active of a role are they taking as a corporate owner of significant parts of these companies at a time when they are such a massive shareholder? I also am curious about the whole concept of this fund. I mean, for people who are not aware, this was a nation that took its oil wealth, understood that it was temporary, and put it aside for the entirety of the population and has been investing it. How do they diversify away from that that oil patch, given the fact that it continues to provide incredible returns?
Well, energy, a big factor, Tom. You mentioned tech, but energy this year has just been a huge part of the return profile for so many people.
It is. I mean, the sector game is always there, and it's been a different game this year. And what I see on the show, John, is massive, heated difference of opinion about how you get to 4,700 or even out to Credit Suisse's 5,000.
We'll have that conversation in just a moment.
Which sectors get there?
Yeah, it's been energy and financials through the year so far, but that story's faded over the last several months, that's for sure. Jim Bianco of Bianco Research will join us shortly on that. The president of Bianco Research just around the corner from New York City. Equity futures down 4, but negative 0.1% on the S&P 500. Yields are higher by about a basis point to 127.34. And in FX, euro dollar unchanged at 117.12. From New York City, this is Bloomberg.
With the First Word News, I'm Laura Wright. President Biden will unveil a plan today that will give more Americans coronavirus vaccine booster shots. It's a move that has led to criticism that the U.S. is hoarding doses while poorer countries suffer through the pandemic. The president's plan calls for high-risk groups, including healthcare workers and the elderly, to get a third shot as soon as next month. The US is trying to keep the Taliban from accessing assets belonging to Afghanistan's central bank. The Biden administration has frozen almost $9.5 billion in Afghan accounts. The Taliban remains on the Treasury Department's sanctions list. In Haiti, Tropical Storm Grace forced a temporary halt to earthquake search and rescue efforts. Authorities warned some areas in the quake zone could get up to 15 inches of rain. The death toll has been raised to more than 1,900. Almost 10,000 people were injured. For American investors, Chinese stocks are becoming the asset not to own. Influential investors like George Soros have trimmed their China exposure, and Cathie Wood's flagship ETF no longer holds any such shares. One of the world's largest hedge funds, Marshall Wace, says Chinese ADRs are uninvestable. A big reason, pressure from regulators in both the US and China has intensified. When Federal Reserve officials head to their next annual retreat next week to talk economic inequality, they'll be sitting in the wealthiest county in the US. According to the Economic Innovation Group, Wyoming's Kenton County, home to Jackson Hole, has the nation's highest per capita income by assets. In recent years, Jackson Hole has attracted the ultra-rich, thanks in part to its proximity to the renowned ski slopes. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Clear direction is to be reducing monetary stimulus, that is lifting the official cash rate, and that in turn tightening monetary policy. So this, in a sense, has not shifted us at all from that broad path, but it has given us time for pause.
How quickly things change in New Zealand. That was the Governor of the Reserve Bank of New Zealand, Adrian Orr, and Governor Orr, Tom Keene, was looking at raising interest rates and then bang. One case, 3-day lockdown, and no chance. How do you hike interest rates, Tom, when the country's locked down?
Well, you don't, and particularly with the world visibility that they received as an island nation or a two-island nation. John, it was very real and very sudden, and if you wonder, John, if other central banks will have the same challenge.
This is the extreme example, but I know exactly where you're going. Your equity market is down 3 on the S&P. We're negative about 0.1%. TK yields are higher by a basis point or two at 127.84. And there's that bounce back in crude, up by 1.22%, Tom. WTI 67.37.
A lot of people get lathered up over Jackson Hole. I've been there many, many times. It's truly an academic conference. There's boring papers that Michael McKee reads cover to cover. I'll take one or two of the papers typically and read them cover to cover. But too often they really work at the Kansas City Fed to make it a constructive snooze fest. James Bianco knows this, Bianco Research, and he joins us now for really my first conversation on what the central bank will do. What does Chairman Powell, Jim Bianco, not want to do in Wyoming?
He doesn't want to cause waves. He doesn't want to cause problems, similar to what he did in December of 2018 when he talked about the taper was on automatic pilot and it was going to be like watching paint dry, and it greatly upset the market, leading to the Powell pivot 2 weeks later. What he wants to do is lay out a plan to begin a taper sometime next year, and he's going to put a lot of caveats in it. And those caveats are going to be provided that the economic growth continues and provided that there is no surprises to the economy, and that's going to be a shout out to if Delta continues to rise and restrictions, I don't want to say lockdowns, but restrictions on the economy continue, that could derail the plan for tapering.
Jim, a lot of people are looking for taper talk. However, we've already gotten some sense that one of the main topics will be income inequality actually contributing to low rates going forward and what Fed policy can do about that. As a market watcher, how much are you looking at that as possibly giving more of a sense of what's to come than people are perhaps expecting?
Well, income inequality is a big problem, and the Federal Reserve's big picture policy can contribute to that. But the immediate policy, when I mean immediate here, year to year, it's very hard to say that they're going to adjust policy either way, because if they were going to talk about income inequality, I really think that what they should be doing is raising rates, or they should be tapering faster, because I think it's this low rate creating this speculative atmosphere in financial markets that is contributing to income inequality. So, yeah, I think they're going to talk about it. I hope they acknowledge their role in it, although sometimes I have my doubts. And I'll see what they want to do, but more likely it's going to be on the regulatory side, if anything.
Jim, you're not alone in saying this. A lot of people saying that Fed policy has actually contributed to widening income inequality, and it goes to a broader point. Have we reached the threshold at which Fed policy is viewed as perhaps harming more than helping on the margins, not only with respect to inflating asset prices, but also at a time when consumer prices are increasing at a faster pace than many people had expected?
Yeah, if you look at financial markets, let's take the stock market. The dirty little secret is it's not cheap. You know, there are booming earnings, but you're paying big for those earnings. The valuations in the market are near the 2000 peak valuations, but the justification is twofold. One, earnings are very strong, and two, Jay Powell's got your back. And if that creates an environment where there is a change in policy, like inflation is perceived to be persistent instead of transitory, that could lead to a sharp pullback in markets. So they're setting up markets that they need to continue to get constant good news to go up. Now they have, for nearly a year now, they've been getting constant good news to go up. But if that day ever comes that it doesn't, they could be setting it up for a bigger fall than you would otherwise see.
Jim, can you help us understand why yields are where they are? Even Fed Chair Jay Powell has said he doesn't quite understand why they are as low as they are. You say perhaps it makes sense if you take a look at growth outlook, not necessarily inflation. Can you elaborate?
Yeah, I think if you look at, I've been looking at the reopening stocks, an index of them, and they have been dramatically underperforming the market since the March peak, which also happens to be when the 10-year yield peaked. And if you overlay a chart of reopening stocks' relative performance to the 10-year yield, it's the same thing. What that suggests is that the market is more focused on growth, as it fears that growth is going to slow. And we're not talking recession here. We're talking about from a very high level, 6% or so GDP estimates, down to something a little bit less than that. As growth slows, so do interest rates. As growth picks up, so would interest rates. And the biggest driver, I think, of growth slowing is the fear of restrictions from the Delta variant, as we see more and more. I'm in Chicago, and just yesterday they announced that starting Friday, everybody has to wear a mask indoors. More stuff like that will be coming and coming and coming, and that's the fear.
Jim, at Jackson Hole, there'll be a lot of academic papers, and I'm going to pick on the vice chairman of the Fed, Richard Clarida, with his wonderful DSGE that he did with Gertler years ago, I believe 1994. Does any of the theory that we have now apply to the actual debates of Jackson Hole? Does dynamic stochastic general equilibrium theory actually matter in the milieu we're in?
You know, the best Federal Reserve officials to listen to are the ones that recently leave. Dan Tarullo was at the Fed during the financial crisis, left in 2017, and gave a speech at Brookings where he said the Fed has no working theory on inflation. That if you test any theory you want, rational expectations, anchoring, monetary velocity of money, it just doesn't pan out in the statistics that it is a good explanation of what causes inflation. We are all kind of in the dark, and I think Rich Clarida is also in the dark. He's been a big advocate of inflation being well anchored. There's arguments to be made that it's becoming unanchored because you've seen the big rise in the inflation expectations, especially like the University of Michigan survey. And it's going to be very difficult for the Fed because they want to project certainty, or they want to project calm, that we've got this figured out, where inflation is going to go. It's going to be transitory. But the fact of the matter is they don't know, we don't know. Inflation is a very difficult thing to get your head around, and it's a very difficult thing to understand. So it's a big guess, and we'll have to see. And some of those papers, I think, should address that next week.
Jim, that's such a great line. We've got to leave it there. Jim Bianco there of Bianco Research, the president, because when you leave, Lisa, you get to say what you really think.
Yeah, you can actually be controversial. You can actually have a point of view rather than just talk in these sort of bland academic phrases that lose all their meaning, like transitory.
I remember hearing some stories about time spent on Governor King's MPC at the Bank of England, Tom, and Governor King had told everybody, you can say what you like about QE, but you're not allowed to say it doesn't work. You're not allowed to say it doesn't work. There was always that leadership that said, here are the parameters, go talk about whatever you want.
I just had a nightmare vision. You, me, and Lisa walking out of the lodge, out to the railing, and looking over the valley.
I won't be there, Tom. Keep dreaming. From New York, this is Bloomberg.
Although we've seen some headwinds recently, recovery is still in place.
This feels more like coming down from stimulus payments than it does reflecting Delta variant fears.
When it is your hard-earned money as opposed to tax dollars, it takes a bigger hit to that mental outlook.
This is going to be a grinding market, one where the biggest challenge continues to be for investors to stay in the market.
The market's making all-time highs. I look at the bond market, and bond market's telling you something funny.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Thank you for being with us. A simulcast on Bloomberg Radio and Bloomberg Television. Red and green on the screen. John, a fractionally better tape than the snooze fest of 2 hours ago.
Bond yield tied, Tom, by a couple of basis points. Let's call it 128 on 10s, and you get Fed minutes a little bit later this afternoon. It's on to Jackson Hole. That's the next stop for this market.
Well, the next stop is Jackson Hole, but we got a little bit of international relations in the way of it. John, what do you see from Europe that changes the confidence given all the trauma in Afghanistan?
On Afghanistan specifically, Tom, on the military side of things.
Well, I guess the military, but it folds over into the body language, as we heard from Macron yesterday, Prime Minister Johnson yesterday, his phone call with the president, and it's just, it's a stew, if you will, into the weekend.
If there was some upset, Tom, it was the lack of communication we've seen between the president and foreign leaders. When Jake Sullivan hosted that news conference yesterday, the National Security Advisor said the president still hadn't spoken to those foreign leaders. Subsequently, he did speak to Prime Minister Boris Johnson, considering how much work the Allies did with the United States over the last 2 decades, Tom. It was a surprise for many that the president had yet to speak with a foreign leader at that point of the news conference yesterday afternoon.
Lisa, global markets, and yet within it, dollar strength.
Well, dollar strength at a time of global uncertainty around the Delta variant and growth therein. We haven't really been talking about this, but this is the 7th straight day that the Ningbo port has been partially shuttered. This is the third most active container port out there in the world, and we have diversions of ships. We have delays that have been furthered. Again, how much does this play into inflationary pressures that are reducing consumer confidence in the United States, Tom?
different litmus papers out there. I mentioned Euro Swissy earlier. John, just Euro dollar, let's be clear. We haven't broken a 117 level, have we?
We're there right now. 117.10 is where we opened, Tom. We came really close early this morning. The low was 117.02. The outlook for Europe, Tom. What is the outlook for Europe right now compared to the United States? Certainly doesn't have the fiscal impulse for America. We can talk about the fiscal impulse for America a little bit later this morning. And then to Asia. Very, very dependent on what happens in Asia, Tom, in a way that maybe the United States is not, Germany specifically. And to Lisa's point, this is where you start to fold all these things together. What's taking place in China right now will have a demand impact and will have a supply impact as well. And the big change over the last year, we've had a decade, more than that, of China exporting disinflation. Right. And now because of supply constraints, China is exporting quite the opposite. That's a change.
It's a change, and also, of course, with the goods services mix. Liz-Ann Saunders talking this up this morning on Twitter. You wonder, folks, if goods diminish a little bit, what that does to China as well. On the data, John, I'm just going to note the VIX comes in from 17.84, down negative 50, SPX negative 2. What do you see?
Yields up a couple of basis points, no drama, 127.67 on 10-year yields in America. Crude up by 80 cents. We're up by 1.2%, 67.41. Just a couple of days, 4 days, Tom, of losses on crude. Several weeks of that as well. There was some real pain a couple of weeks back. Crude bouncing back again this morning, but this folds into the demand story coming out of Asia. Crude has been really soft recently. It's been a struggle. And many people following the commodity market, they've had to make a change.
This is going to be interesting, John, and I'm glad we're doing this. Nuveen is out of Chicago, and of course the heritage is municipal bonds. The heritage is perhaps an older demographic worried about retirement. Brian Nick joins us right now, Nuveen, Chief Investment Strategist. Brian, you've got a single sentence in your note which really gets to the heart of it. For all the people of the Nuveen world and even the Bloomberg surveillance world, what do we do if rates don't rise? What do we do with our actuarial assumption and our goal of trying to retire like John Ferro with a massive pot?
Well, thanks for having me. There's really no good options. You can look at a few things. You can try to just sort of do what you've been doing, tolerate lower returns because your yields are lower, and frankly, the stock market is valued much more highly than it was 10 years ago. So if you're looking back at the 2010s and trying to replicate that performance in the 2020s, we think it's going to be extremely challenging, especially if yields don't increase substantially, as we don't expect them to. They may in the short term with the taper, with Fed raising rates in this cycle, but we're not going back to 5, 6, 7% on the 10-year. So what you can do is try to diversify out of some of that traditional fixed income within munis. You can look at taking on more credit risk. You can look at higher yielding munis. You can also look at alternatives. Real estate, income producing equity sectors could be a bigger part of a portfolio for somebody who needs that yield in their portfolio. If you're still looking at growth, there are still options out there, but it's those income producing investors that we know make up a large portion of our and other client bases that are really struggling for what to do at the moment.
Brian, can they go for dividend income? Does that look good right now? Earnings have been tremendous. Capital returns have been really decent this year as well. Is that a decent strategy still?
We think so, and I think we'd be leaning more on dividend growth. If you just look at dividend yield, you'll end up with a more defensive mix of sectors, which has done well recently as yields have been falling again. So it tends to have that negative correlation to interest rates because these sectors of the equity markets, consumer staples, utilities, tend to look more attractive as yields are falling and also have those defensive properties. But if you're looking at more dividend growth sectors, you can be sort of a little bit less picky when it comes to what sectors you're invested in. You can look at companies that are, looking to grow not just earnings but dividends as well, and that can ultimately, I think, reduce volatility, reduce your exposure to the overly defensive parts of the market. But again, not a complete substitute for fixed income because of the volatility involved.
Brian, how much conviction do you have right now? And I ask as we discuss this Bank of America research note where they basically say that 10-year yields could either go to 1% or 2%. They're not sure.
That sounds like a reasonable range to us for the balance of the year, although we've been wrong before. I think 2% at this point would be a bit of a stretch, but we do have conviction that rates ought to be going up from here and will go up from here. I think some of the pressure may come from the Fed. Right now, they're really under no pressure at all to do the taper. If you look at what's happening, if anything, the markets are kind of hinting that the Fed may be making a mistake by moving too early on the taper. If you look at real interest rates, they've been creeping up this week. If you look at inflation break-evens, they've been coming down, although they've been very steady. When you have that kind of a dynamic, it would tend to leave rates pretty stable. But I do think eventually real interest rates will win out. We'll get a sort of a flattening or normalization in break-evens. And if you're just looking at the growth component, with the pressure taken off from the taper and the expectations that the Fed will be raising rates sometime in the next 2 to 3 years at least, the real interest rates, especially on a short end, should start to come up. And I think that'll push the long end higher as well. Although the yield curve probably never gets as steep as it was, back in the pre-financial crisis days.
You said that the market seems to be indicating that perhaps the Fed is making a mistake in tapering too early. And you pointed to real yields, and I'm wondering whether a negative nearly 1% yield is perhaps indicating an accident. Where should real yields actually be?
Well, if you think there should be tied at all to real GDP outlook, I'd say real yields should be strongly positive right now, but we know that hasn't been the case for a long time. I think when I look at real yields, I look at the direction of real yields. So obviously they're in this highly negative territory. Negative 1.1 or 1.2% for a real 10-year yield is extremely low. But if you look at the direction, we've seen a bit of a lift from the bottom a couple of weeks ago. That has come as break-evens are falling. When I see those two things together, it's usually a sign that the market is worried the Fed is going to tighten too quickly. We've seen this at very specific times. Late 2018 comes to mind, the last time the market was sort of cautioning the Fed about moving too quickly. But again, in terms, it's sort of the magnitude has not been huge. The direction has been hinting at that, though. So I think it'll be interesting to see the Fed minutes this week and also what the Fed members have to say at Jackson Hole next week.
Brian, thank you. It's good to catch up. Brian Nick, Nuveen Chief Investment Strategist. Just to frame the moment, investors can live in a low-growth, low-inflation world. We know how to operate in that world, Tom. We've had 10 years of it. Policymakers can't operate in a low-growth, low-inflation world. The Fed doesn't want to operate in a low-inflation world.
Yeah.
Policymakers in D.C., and I'm talking about politicians, they can't operate, they can't survive in a low-growth world. So what's the most toxic mix for investors right now? It's decelerating growth and persistently high inflation. I'm not talking about stagflation.
No, but it's on the edge of it.
I'm talking about decelerating growth and persistent inflation into next year. So let's fold that in to what we heard from Norway's wealth fund boss about 30 minutes ago. We sit at a moment, Tom, with equities at all-time highs and bond yields near all-time lows. Those two things are really, really difficult if we're about to see decelerating growth and persistently high inflation. Tom, that's toxic. That is toxic for this market if that is the state of play going into next year.
That's a constructed state of play. It may be a correct state of play as well. I think there's some nuances in there, John, and one of them is just the resiliency of more open economies to succeed and fail, and you see that with experiments. Here's a headline from Joe Feldman, John, that came out moments ago, his report on Target. John, I had no idea 17% of Target sales is digital. That's innovation.
And they're processing a lot of those things, Tom, in store. Order online, pick up in store. Been a big change for Main Street, the High Street.
I'm behind on this story. I mean, this is again where corporations, and David Stubbs I thought was brilliant on this with JP Morgan frankly pushing against the caution we heard from Oslo.
Well, Tom, have a look at some of the e-commerce numbers out of Target for the quarterly numbers last year. Some really tidy performance from Target, and that's really reflected in the stock.
I would suggest, John, fossils like me are out of touch with the technological wallop that's out there, including the technology of the New York Yankees to deliver power in the middle of the lineup.
Was that another baseball reference?
That was a baseball reference.
That for Lisa?
It's been a bad day.
Thanks.
Lisa's not a Red Sox
fan. The Mets are going the other way.
John, we don't need to talk about them.
Steve Cohen's going to spend $1 trillion today on the Mets.
Yeah, Steve, happy with the Mets? We don't talk about the Mets.
No, you don't talk about the Mets.
Let's not talk about baseball. 127.34 on 10s.
They lost.
Your equity market.
Last night.
Futures down 1/10%. What a show this morning. All that energy. It's overwhelming, Tom. It's too much. New York.
What's Harry Kane going to
This is Bloomberg.
With the First Word News, I'm Laura Wright. A group of congressional Democrats and Republicans wants President Biden to delay full U.S. troop withdrawal from Afghanistan. According to the New York Times, the 44 lawmakers want to extend the August 31st deadline so the troops can help American citizens, allies, and vulnerable Afghans leave the country. The president has authorized the deployment of 6,000 troops to help with the evacuation. President Biden will unveil a plan today that will give more Americans coronavirus vaccine booster shots. It's a move that has led to criticism that the US is hoarding doses while poorer countries suffer through the pandemic. The president's plan calls for high-risk groups, including healthcare workers and the elderly, to get a third shot as soon as next month. Once again, Target has topped Wall Street sales and earnings expectations. Still, a slowdown in growth raised questions about how much longer those results can last. Target has been arguably the biggest winner among major retailers during the pandemic. Its stock has surged more than 40% this year, but it hasn't outperformed expectations the way it did in 2020. Lowe's raised its full-year forecast after posting better than expected quarterly sales figures. Gains in the home improvement chain's professional business helped offset a slowdown in demand from do-it-yourself customers. Lowe's performance contrasts with the weaker than expected results from rival Home Depot yesterday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
I do not believe that deploying tens of thousands of British troops to fight the Taliban is an option that, no matter how sincerely people may advocate it, and I appreciate their sincerity, but I do not believe that that is an option.
Prime Minister Boris Johnson of the UK speaking in an emergency debate in Parliament from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Equity futures down 5. We're negative 5 points on the S&P and down a little more than 1/10%. Yields are higher by about a single basis point on a 10-year to 127. Crude bouncing back, Tom, up almost 1 full percentage point to 67.21. Afghanistan still very much top of mind worldwide.
It is. And John, you know this better than anyone. It's about migration. It is about distances. It's 6,900 miles from Kabul to Washington, and it is way less to Europe. Let's pick Berlin, John. 4,100 miles. That's a big, big difference in miles for a great migration. John, why do you bring in the wonderful Therese Raphael?
Therese Raphael joins us now from Bloomberg Opinion. Therese, let's start there with the UK and the response that you've witnessed in the United Kingdom off the back of some pretty chaotic images over the weekend.
Yeah, well, today in Parliament, which has been recalled to debate the Afghan crisis, you have MP after MP on both sides of the aisle, Conservative and Labour, criticizing the government's policy, its failure to anticipate the fall of Kabul, to get refugees and those who help the British military, but also women and children and others who are vulnerable out earlier, to define the asylum policy a little more clearly. So, it's being presented as a huge test for Boris Johnson. That said, Johnson in his statement took a very different line, I'd say, than President Biden. He did not criticize the Afghan military. On the contrary, he said they fought valiantly and lost many tens of thousands of lives for years. And he said very pointedly that the West could not continue this U.S.-led mission without American logistics, American air power, and American money.
You've identified the difference between Prime Minister Boris Johnson and the speech from President Biden just 48 hours ago. One similarity, though, is continuously bringing up should we stay or should we leave, when for many people, as you know, the issue has been how we left, how the United States left, how the UK left. Have they addressed that? Why the chaos that we saw over the weekend?
That's the open question, and the UK government doesn't have any, I think, better answers to it than Washington has provided so far. Many MPs have asked why, when Boris Johnson knew that there would be a withdrawal, why there was not more done to secure passage for even British citizens and soldiers. And we have the prospect of the UK ambassador to Afghanistan at the airport issuing visas, after the U.S. embassy had been shut down. So very much an open question, and I think there will be an investigation of that. And we've had, many quotes from Johnson himself very recently, saying that the Taliban were in no position to win a military victory. So I think, both allies have questions to answer here. But of course, the UK military withdrawal really began back in 2012 when David Cameron announced the decision to end the UK's military operation there, which happened in 2014. So there wasn't the same presence that the U.S. had.
Therese, what will this do to the relationship between the U.S. and the U.K. going forward, if anything, or is it going to be just basically another bump along a road to sort of restore that alliance?
Well, I think on the surface, you'll obviously hear the reassurances that the alliance is strong, that we heard a call between Boris Johnson and President Biden. But beneath that, there is a change here. The assumption after Donald Trump was voted out of office was that the alliance would return to a footing that was more familiar from the post-Cold War period, one of collaboration, cooperation, reinforcing the international rules-based order. I think that's very clearly over from the perspective of a lot of European allies. And, from Britain, there is a sense that America's much diminished appetite for intervention has consequences for security in Europe. Beyond, the refugee question, there's a question of narcotics trafficking and the all-important question of whether terrorists and extremists will again be able to more easily recede in that region and in Britain itself.
Therese, there's an understanding here over any number of decades of the expansion of quote-unquote a liberal democracy. And let's say in America it was brought forward by neoconservatives. Is there an equivalent British neoconservative, or is that a uniquely American segment philosophy?
I think the British equivalent is very different. I mean, first of all, on social and economic policy, it's quite far from what we would call neocon in the U.S. But on security policy, the British conservatives, I think, are more committed to an internationalist role. And partly, as you said right in your intro, this is about geography. We are just closer to the trouble spots of the world sitting here in London. And I think that dictates a lot of the debate here. And there's also, of course, a memory of the role Winston Churchill played in World War II. Hyped as it is sometimes, that plays a role in a sense that the UK needs to act to consolidate the rules-based international order and sort of project certain values abroad. That is now really clashed with the limitations of Britain's military capabilities here and the U.S. administration's willingness to engage outside of the U.S. in areas where it perceives a vital interest.
Therese, it's great to catch up to get your view on what's happening at the moment. Therese Raphael there, Bloomberg Opinion Editor. And to your point, Tom, geography is so important.
I am, and to have Thomas Barfield with us the other day, John, was such an honor. I mean, Professor Barfield up at Boston University owns the study of the geography and the underlying tribes of Afghanistan. I find so much of the analysis cursory to what's going on now. And that's why, John, I'm less this morning in the look back, OMG, we got it wrong. Clearly we did. I'm interested in the tribal dynamics and the Taliban in the coming, let's say, 2 weeks.
Tom, we've got to think about the people left behind, and we've got to talk about the people who served there. I think a lot of us have spoken to friends, family who did serve there. I spoke to my brother-in-law recently, and Tom, he was not surprised that the Afghan army fell as quickly as it did. Yeah. He did several tours of Afghanistan in the early part, a couple of decades ago. I remember him going off for a long, long time and just praying that he would come back, and luckily for us, he did, Tom. Others didn't. And for the people that lost family members over the last couple of decades, Tom, they might have a view that we should pull out. They might have a view that we should stay. One place you can find almost universal agreement at the moment is how upset people were by the chaos over the weekend. And still, that has not been sufficiently addressed, not just by this administration. This is not just a criticism of what's happening here. It has not been sufficiently addressed anywhere, Tom, including in the UK, and as Therese said, including from the Prime Minister.
The distinction of that debate is witnessed by Condoleezza Rice and Richard Haas is should we have left a stub force to provide assistance? I don't have an answer.
There's a lot of pain. Coming up, Jack Lew, former US Treasury Secretary from New York City this morning. Good morning. Alongside Tom Keene, Lisa Abramowicz, I'm Jonathan Ferro. For our audience worldwide, your equity market is lower by 0.1%. This is Bloomberg. Live Live from New York City for our audience worldwide, heard on radio, seen on TV. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market down 6 on the S&P, negative a little more than 0.1% on the S&P 500. Into the bond market with yields higher by almost a basis point at 126.84. With some economic data, here's our very own Michael McKee.
Good morning, John. We've got the housing starts numbers, and everybody's keeping an eye on the housing sector because it has contributed a lot to GDP in recent months until the most recent quarter. Housing starts at this point fall by 7% in the month of July, something of a surprise. There was an expectation they might drop back by 2.6%. They were up 6.3% in the month of June. Building permits show a little bit more confidence. They were down in June. They're up by 2.6%, so it may be just a temporary situation. Housing starts have been difficult to track because we have seen shortages of lumber, high prices for construction materials, then they came down again, shortage of construction workers. But this does suggest that we remain on track, even if not in the same magnitude. 1,534,000 annual rate for housing starts for those who keep track of the numbers.
Can you glean price from this? That's all we want to know. Is the price going to continue to go moonshot?
Well, the price would be probably going up if they can't build enough houses. That's been an issue, not just the cost of borrowing money, which is really cheap, but the fact that there's so little inventory, it pushes housing up. Single-family starts did rise by 2.5% above the number last year in July, 4.5% below June, though. So single-family homes take a breather in the month.
Mike, the market's not doing much with this. Yield high by almost a basis point, 126.84 on 10s into the numbers, 127 coming out of it. A little bit later this afternoon, 2 p.m. Eastern. Fed minutes. Mike, what are you looking for?
Well, we're looking to see what they had said about tapering, whether they told Jay Powell to go ahead and announce some policy change at Jackson Hole, very unlikely, and also what they were thinking about in terms of how they would go about it. Did they get a presentation from staff on at what rate they would cut back on purchases? So some perhaps details, but you also have to remember this was the end of July, and since then we've had this big rise in COVID cases, and that could change some people's minds about what might happen.
They might be dated already, Tom, going into Jackson Hole next week.
Yeah, well, I think it's a change story. There's no question about it with the economic data and with what we see, the horrific data out of the south of the nation. It's a movable target 10 days out from Jackson Hole. This is a great pleasure. Not that Jack Lew, working for Joe Moakley years ago in Massachusetts, did it awfully young, but he did it across multiple platforms of public service. You know Jack Lew is a former United States Secretary of Treasury, but far more was his tour of duty at state beforehand. We're honored that the Secretary could join us this morning. Jack Lew, I want to go to Leon Panetta's incendiary comments equating Afghanistan to Bay of Pigs of 1961. From Kabul to Havana and south of Havana on the shore in April of 1961, are there similarities for this nation?
Look, I think we're going through an incredibly tragic time right now with the fall of Afghanistan, and I think the moment calls for looking forward, not back. The evacuation of people who want to leave Afghanistan is the job right now. I think the fact that that operation is moving ahead shows that there was, in fact, planning to deal with a great deal of uncertainty. There'll be time after this to look back and to ask the question, but there have been different decisions. I think for right now, the job number one is to keep moving forward and to get as many people, Americans and people who cooperated with and helped our effort there, who want to leave the country, out of the country.
All would agree you've been a class act about avoiding the Republican-Democrat sniping, the snark moments that we see day after day after day. But assist us with the institutional weakness, perhaps, that was there with the Trump administration. Did any of this occur because state was institutionally weaker, or our intelligence communities were institutionally weaker?
I think the 4 years of the Trump administration weakened many institutions in terms of the ability of experts to voice their views and express them and have them considered in terms of the people left behind and the need to rebuild. So I think the damage is broad. I've seen it in all the agencies that I have been at in the past. I think that going forward, the job of rebuilding is well underway, but it takes time. And I'm not sure the extent to which the current circumstance can be tied to anything specific in that regard, but I do think that there was a legacy of serious damage in many of the agencies.
Jack, as a former U.S. Treasury Secretary, what should the U.S. do with respect to the financial assets of the Taliban, of Afghanistan, at a time when there is this sort of peace offering, but history has a very different story to tell?
I think the burden of proof is on the Taliban going forward. We have too much experience from the past to take at their word that anything is going to be different. I certainly hope that there will be a difference, but I think the question of whether or not to treat the government as a legitimate government, as a partner to open financial flows and the like, has to come after there's more evidence of what that government is going to do. They've clearly learned that they need to talk differently than they did in the 1990s. We now have to learn whether they're going to act differently.
So how concerned are you that as we have this controversy surrounding the Biden administration, that we're hitting a potential debt ceiling debate that could rival 2011, and we have an infrastructure plan that may get through, at least the $550 billion one, but that really is called into question when you look at the $3.5 trillion Reconciliation Act? How close are we to another debt ceiling debacle akin to what we saw a decade ago?
Well, I'm not sure I would conflate the issues of what's going on in Afghanistan with the question of the debt limit. I think before the events of the last week, there was considerable uncertainty as to how the debt limit would be resolved. That remains the case. I think it's extremely dangerous for so many senators, Republican senators, to sign on to a letter saying they will not support a debt limit increase. Procedurally, it's very challenging unless you get some bipartisan support. Their pathways are there, but there are fewer. And the reality is, the debt limit is the final, not the first decision. It's to pay old bills, not new bills. And when we saw in 2017 an enormous increase in the debt through the tax cut, when we saw through the spending through the Trump years, enormous increases in the deficit, and the bipartisan move to respond appropriately to COVID. I didn't hear people saying we're going to come back later and say we're not going to raise the debt limit. It's wrong. It's a self-inflicted wound if we end up with a crisis that can be completely avoided. I hope that the pathway towards resolving it is relatively clear and quick, but if I had to guess, there's going to be some choppiness between now and when it's done, and we know from experience that that causes a great deal of anxiety. This is not a moment when there's a need for any more anxiety.
Jack Lew, I don't know if you wanted to the philosophy department at Harvard, but there is the concentration, and so much of that is studying the different philosophers, and I think of John Kelvin and America's deep-seated aversion to debt. And yet here we are with a debt and a deficit that Hal Brown and others never, ever would have perceived they would be in. Speak to conservatives now in their concern about the fact we have too much debt.
So, Tom, I've actually stayed consistent through a period when so many people have deviated from their traditional views on deficits and debt. I didn't hear a lot of concerns from conservatives about deficits and debt when we were cutting taxes in a way that was irresponsible at a time when the economy was very healthy. I think it was appropriate for both sides to say we're not going to worry about the deficit or the debt at the height of the COVID crisis. You look at what's going on right now. Congress is working with the administration to pay for the biggest investment in my professional career in terms of domestic priorities. Critical investments, important investments. I think the debate in Congress will come down to how much willingness is there to pay for these investments, and that will dictate the size of the package. I think the hopeful sign is that there is considerable consensus on a very large pool of offsets to pay for a significant investment. It's fundamentally different than saying devil may care, let the next generation pay for it. In terms of the cost of servicing the debt, with the near zero interest rates that we're seeing, for the next 5-10 years, the sustainment of payment of debt service is not the issue. I actually think the challenge is coming out of this, getting back to a more traditional view that over time, when the economy is doing well, you need to pay for what you do and work at reducing the deficit. And when the economy is in trouble, you use your fiscal canon to deal with that challenge. We're now at an ambiguous moment. Coming out of the COVID crisis, everything is uncertain. You were talking earlier in the program about the dark room. We don't know where the virus is going. We don't know if full employment will be sustained. I think we're doing the right things, making sure our economy comes back strong and sustainably out of the worst crisis that I've ever seen.
Jack Lew, we appreciate your time, sir. It's good to hear from you. Jack Lew there, the former US Treasury Secretary. Tom Keene, on that final point, it is a very dark room still, trying to look ahead to the end of this year, never mind what next year looks like. And as you and I have mentioned previously, it went from April 2020 to May 2020, and now we're talking about 22.
Get out the calendar, John, and it's about schools. I'm going to go to the desperation to get a constructive vaccine for those under 12 years old. That's the key item right now.
Elisa has made that point repeatedly. Yes. And it's a good point as well. Equity futures down 5. We're off by 6 on the S&P. Coming up on the Open, we'll catch up with Alicia Levine of BNY Mellon on this market. From New York City, this is Bloomberg.
With the first word news, I'm Laura Wright. In Afghanistan, Taliban fighters have encircled the Kabul airport with security checks. That's raising concerns the militants will prevent citizens from leaving the country. The airport itself is under US military control, and the Biden administration says the Taliban has promised the safe passage to Americans who need to get to the airport so that they can leave. Meanwhile, the US is trying to keep the Taliban from accessing assets belonging to Afghanistan's central bank. The Biden administration has frozen almost $9.5 billion in Afghan accounts. The Taliban remains on the Treasury Department's sanction list. In Haiti, Tropical Storm Grace forced a temporary halt to earthquake search and rescue efforts. Authorities warned some areas in the quake zone could get up to 15 inches of rain. The death toll has now been raised to more than 1,900. Almost 10,000 people were injured. For American investors, Chinese stocks are becoming the asset not to own. Influential investors like George Soros have trimmed their China exposure, and Cathie Wood's flagship ETF no longer holds any such shares. One of the world's largest hedge funds, Marshall Wace, says Chinese ADRs are uninvestable. A big reason pressure from regulators in both the US and China has intensified. The world's largest sovereign wealth fund made $110 billion in the first half of the year. The Norwegian fund generated a 9.4% return. Its investments in energy, finance, and tech companies helped drive double-digit gains in its stock portfolio. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
My guess is that given enough time, we may well end up in a situation where we have yearly, let's say at a minimum, yearly vaccinations, just like the flu.
The gentleman from Moderna, Mr. Afghan there, important comments now in a well-timed interview. Things have changed in the last, I'm going to say 1 week. We are interested now again in immigration, possibly migration from Afghanistan to various and sundry Western countries, certainly a topic at hand. Before this event, David Rubenstein of the Carlyle Group spoke to someone who has lived this, and of course it's the David Rubenstein Show. We'll tell you about that here in a moment. Mr. Rubenstein joins us right now. I think, David, of Vartan Gregorian and the Armenian exercise and how Mr. Afghan, Mr. Gregorian, and others have stated, we were immigrants, we came here, we were successful, this can work. Tell us about his path to the United States and to great wealth.
For those who don't know, he's the chairman of Moderna and the person who really
seeded the company. It was his idea. It's an incredible story. He's an Armenian refugee from Lebanon. He grew up in Lebanon, but his parents were Armenian of origin. Went to Canada, got a degree at McGill, came to MIT, got a PhD, and basically started companies. He's now started 76 companies, and many of them have been fabulously successful. He's now running something called Flagship Pioneering, which comes up with new ideas for biotech investing and starts companies, many of which become successful, like Moderna, though that's by far the most successful.
How can guys like you compete with guys like him for intellectual excellence? Doesn't he have the upper hand over private equity and other sources of venture capital?
Well, there's no doubt that people who are immigrants often tend to be very hardworking and very smart, and they are the leaders of many entrepreneurial ventures. On the other hand, private equity people are investing with him and alongside him, and so I wouldn't say it's competitive, but there's no doubt that he is a unique force. He is now running this venture operation which creates companies like Moderna, and Moderna is a company which has increased in value about 100 times from the initial money that he put in. I think it was $11 million he initially put in. It's up 100 times since then, and he has become very wealthy, and he's giving away a lot of his money to various causes, including immigration-related things and helping Armenia. But he's very, very interested in biotech.
He's also very much at the center of the health catastrophe that has unfolded and will likely be a mainstay going forward as we rely on vaccinations and potentially booster shots to ward off following variations of this virus. There is a question of booster shots. What does he foresee in terms of demand going forward, in terms of the need that we will have for ongoing shots?
Well, just as we are getting used to over many years having a flu shot every year, I think his view is we'll be getting a kind of a Moderna or a Pfizer or some equivalent shot for this type of virus every year. And right now, the FDA is probably going to say we need to have a booster shot. I think the Biden administration is now promoting the idea of a booster shot for those people that have had the original Moderna or Pfizer or Johnson & Johnson shots. And I think once we have the booster shot, I think you'll be seeing this every year. And I think his company is probably going to be benefiting from it.
David, you're on the front lines of this issue, both as the interviewer for these shows that are phenomenal every week, as well as the CEO and chair of Carlyle Group. And I'm wondering whether you've mandated vaccines, how closely you're watching how this is unfolding on a national level from a corporate and federal level to determine how to create policy going forward for your employees.
Well, I think Carlyle has decided that its employees, when they come back to work, should be vaccinated. There obviously are some medical and religious reasons why some might not be able to be, but we think in our offices, and I think this is true of all the major corporations that I've been talking to lately, they think it's much better for their employees to be vaccinated, and that will be Carlyle's policy.
David, your thoughts, as someone who attends world events, you and I have shared the stage at Davos, there's many other events as well. Your thoughts on Afghanistan, and particularly the elite of Afghanistan, the people that have provided innovation there for, let's say, 10 years, maybe 15 years. What is next?
It's a sad situation for Afghanistan and a sad situation for our country. The most important thing now is dealing with the humanitarian issues of getting people out who've been helpful to our country. Hopefully, our U.S. government will be able to work out ways that can be done, but it's not going to be pleasant, not going to be easy, it's not going to be quick. So clearly some mistakes were made, as the administration has said, but before we figure out who made what mistakes and how we can correct them in the future, we've got to deal with the present problem of getting people out who are loyal to the United States and the allies in trying to prevent the Taliban from taking over.
David Rubenstein, thank you so much. With the Carlyle Group and, of course, host of the David Rubenstein Show, peer-to-peer conversations. Much to talk about this morning. I know Rick Reeder will join us as well as we move forward this morning. Lisa, I just look at a tape that's waiting for news. I mean, there's no other way to put it.
Well, this Bank of America note, we keep coming back to it because it really highlights the lack of conviction in markets today. It does seem like we're on the precipice of something, right? Whether it's higher inflation or whether it's slower growth, and whether perhaps these things can be happen in tandem.
Yeah.
We're also waiting for a Federal Reserve. I mean, why would anyone have conviction right now to make a certain trade?
We're waiting for the data as well, and I'm going to look at the global litmus paper, which is the deepest marker. That would be the U.S. dollar, 93 on DXY. And Lisa, I'm really watching closely euro dollar, 117.15, 1.1715, a 116 handle there would be a big deal, weaker euro.
The shift, can we just talk about the shift in psychology over the past year when it comes to the dollar? Heading into 2021, it was believed that the dollar would weaken as we get this global recovery. That has been turned on its head. And honestly, I wonder if you could even say the consensus now is for the dollar to either stay where it is or strengthen, as it will be the first probably to tighten among the developed market central banks.
That will be part of the discussion. Again, Lisa Abramowicz and I are thrilled to announce we will attend Jackson Hole. Michael McKee suggests the meeting will be most important this year, particularly with a changed international landscape. Maybe the degrees of freedom that central banks have a little bit constrained. Stay with us through the day, particularly our coverage from Washington with Balance of Power. Futures at -9, Dow futures at -95, and the VIX 18.16. It's a drawdown. Good morning.
I'm Erin Coscarelli with an exclusive Western and Southern Open update from Tennis Channel. American stars shine on day 2 in Cincinnati, one of the biggest stops on tour ahead of the U.S. Open. Team phenom Coco Gauff clinched her first main draw win in Cincinnati with a comfortable straight sets victory over Shea Suwei. The 17-year-old closing it out after a 4-hour rain delay to set up a second-round meeting with the reigning U.S. Open champion, Naomi Osaka. Jessica Pegula avenged her semifinal defeat to the eventual champion in Montreal last week, Camila Giorgi. The New York native jumped out to an early 4-love lead and didn't look back. Pegula's powerful full-court game taking full advantage of a poor performance from the Italian. And don't forget, Tennis Channel's exclusive live daily coverage of the Western and Southern Open hits the air at 11 a.m. Eastern.